everybody. It is. What day is it out there? Sunday, January 8th, 2023. This is not going to be a long stream. I have to work in the clinic tomorrow, my regular job, but I thought I realized when I was prepping for the week that others may enjoy seeing what I do to prep for the week, and then also I got a nice long that I wanted to share, and still long actually. And so I figured, hey, if I'm watching the charts anyway, I might as well educate some folks and maybe document some of the things I'm doing now in case I ever forget how to do things right. So if you want to get a hold of me or want to just follow my ideas, you can find me on Twitter at RedBenTrader. If you want to learn more about the algo I use for execution, you can talk to my coach, Simon. His email is trade, the letter N, word perform, @gmail.com. You may be able to request a 5-day free pass to the room. The room does cost money, but it is a good value, is what I'll say. And you'd be trading with some very accomplished futures day traders using a method that has us all pretty excited and consistently profiting. So let's take a look at what we're looking at for tonight. So first of all, I've got my my long in on my cash account. I've still got these are micros, because the way that we trade is we get into a trade and take profit relatively quickly. Generally on NQ, I'm looking at risking, I can actually move this up now. I'm looking at risking no more than like 17 points, let's say, on average. And so I'm taking my first profit generally at 10 to 12 points. There are situations where I will hold until 30. But beyond that, the rules that I've set for myself, just to keep me from going on tilt, basically, is once I've taken the... well, first of all, let me explain why we do that. The trading style we're using is not your typical momentum trading style. We're not just like following trends and trying to get into the market and catch the big what's it called? Like the big moves. We're actually a little more active than that, looking at taking advantage of things like rotations. A good example of that here, I'll just show you on this first. So an example of something we might do, or a technique that you might see us do, is rather than try to get in here at the breakout and then like hold all day somehow, right? In futures, that's very difficult to do because we want to be able to do this with leverage, with big size, with leverage. So you can't really buy, like, especially like up here, and put your stop down here and expect to hold that the whole day, because your risk would be way too big compared to your potential reward. Now, there are days where it works out, but this is not what markets usually look like, right? Usually, markets... Yeah, I know, my cat's very needy because I've been gone all day at work. I work the weekend so that I can trade during the week. I work tomorrow, so Friday through Monday. It's 12-hour days. They're intense, but I love it. I wouldn't mind doing a little less of it, but it's a good career. What was I saying? Yeah, normally what you get is more of a balance, right? So something like we saw on last Wednesday, the 4th, where you have a lower low and a higher high, and then some kind of a consolidation, rather than just straight down or straight up. And then if you do if you don't have straight up all day, what you often get is a big range that leads to an afternoon extension or a squeeze. And so in both the big range that extends to a squeeze, as well as the range bound expanding negotiation style trading, or a type of trading day, which is really common in the indexes, if you try to trade momentum on days like that, you'll get absolutely crushed. So I'm not saying it's wrong to trade momentum. You just need to know when to do it. So, like on Thursday, let's say, is a good example. If you were trading pre-market, you might have been able to take like a short up here and held it to maybe a target that you know maybe here, right, and then maybe runners would go on from that. But it would be if you got in at the beginning of the day, you can see a breakout over that, it would have failed, and then a breakout under this would have failed. So in both of those situations, and then even if you waited that first 30 minutes, even here a breakout under this one, trying to short that would have failed, and then a breakout over these would have failed unless you're taking profits very quickly. So rather than trying to trade the breakout for continuation, what we tend to do is we are identifying a range, for instance, here to here being a range, and then we're looking to be buyers under that range, to get us back into like a mean, right? Or else sellers above or at the top of that range to try to get us back to the mean. We're not necessarily trying to catch the breakout after that, right? I'm long out of the market before any of this. So to make that kind of a trading style work, you need to be taking profits pretty consistently. And those profits are going to end up being small wins throughout the day on all the balance days. And then sometimes those trades you get in, like let's say I was, my plan was to find a good one here, other than the one I just took, but let's just find a good one where it's really obvious. It's easier here. I'll show you on the. So normally I'm looking at a much smaller chart, and that you'll see these where you kind of fall into a trade that ends up going a lot further than you expect. Pretty often. It's more obvious on the Renko charts, but I can show you on those ones too. So let's say I identify here in the after hours, as I did, that we were in a bullish, it was a bullish environment, right? I've got the algo to help me with that, but you can also just kind of look at the gap and see that they're not able to fill that gap, and they start putting in higher highs, right? And if you look here, we had a pretty significant high they put in, and they made a lower low, and then they broke that high, right? So once that high gets broken, assuming you're in a bullish environment, this worked all the time practically in 2020. It stopped working significantly last year. You had to be a lot more careful with this, but you could still use it for a mean reversion strategy. You just couldn't hold the runners. But once you see something like that, even if you miss this breakout, and note you can't take this breakout, that won't work. that'll hit you hard. So instead, you either have to take the breakout here, or what I like doing better is looking for this location to be bought in the future, and then getting long once that's confirmed. So whether or not it's here, that works just fine. Or else if you're gonna buy the breakout here, that's fine, but you don't wait for this one. You'd take the breakout. Oh, now that you've seen this behavior, you'd basically be buying the breakout after a pullback. So something like that or that is what you'd be looking for, and then your stop would need to go below that swing low. So first of all here, and then here. And the other place you can make this work is if you get a low, if you've got this behavior already identified, you're going to get a lot of people trying to short if they lose a swing low. So like this has a swing low lost, and they're going to short into that. And the more times you can actually get them to drop, even if you can get a second one, but this low still holds, so this one, that's actually a really good play too. And then basically any attempt to break that low that fails, you could buy. Again, this is just to get maybe 12 to 15 points, right? And it'll bring you back to this resistance. What happens there, you don't totally know. And I'm not going to be able to be right 60 to 70% of the time holding the whole position here, because our strategy is it's getting 60 to 70% accuracy to get 10 to 12 points and risking anywhere between like 15 and 17. So it's not quite 1-to-1, but it works so often that as long as I take my profits there, and then if I want to leave the runners, no problem, right? It'll just pay me more. But realize that if let's say I got in here with or actually I guess it'd be here for two NQ contracts, and I'm putting my stop underneath these lows, right, which would be a pretty typical trade for me. So it's important to understand that in my case, after those first those initial 10 points, I'm taking a third off already. So if I was long 3 NQs, I've already paid for most of my risk right here, because now I only have 2 NQ contracts left, and my stop is only maybe like, I don't know, whatever that difference is, maybe like 15 points, let's say, right? And so I've already paid for a majority of that risk. Then I'll take my next profit, usually at 30 points or else at a swing high. And then what I've been taught to do is, if you think that there may be a further extension, right, like maybe a trend day or something like that, your choices are either hold a third and just hold it as long as you possibly can, trailing your stop on swing lows to below that low. Once that swing low is like, once they develop and move volume away from that swing low, you can move it up. So here, for instance, it'd be somewhere like down here, or maybe if you wanted to be a little bit more risky, down here is like where you trail your stop to. But realize that every once in a while they're going to take that stop by going down, up, and then they're going to come down, sweep underneath that stop, and then they're going to run further, right? So sometimes you're going to end up going back and just getting 30 points on that trailer, right? Because if you got in down here at like 48, let's say, it's not even 30, like 25 to 30 points you're going to bank. So that's okay. But what I've learned to do, because I've been trading these Apex accounts, is unless you've made a significant amount in them, well, it depends on how big your account is, but trading these like 150K accounts, once you get the performance account, I think you have to make over 9K before the trailing drawdown kind of pauses, as long as you keep that money in your account. Until that happens, you have a trailing drawdown, which basically means that, like, if you're allowed to lose 5K, let's say, you can lose their 5K, or you can make like 8K and then lose 5K and be knocked out as if you lost 5K from the beginning, right? So with those rules in mind, it makes sense not to keep a third of your trade on as a trailer, because if you keep in mind, like, let's say this one stopped me out, and at first I'd be like, okay, well, I made 25 points on it, no problem. But the problem is that the high was near 80, right? And that pullback is 20 points. So I might have made 25 points, but from the position of like trailing drawdown, I've actually given back 20 of those 25, more or less, because now I can only lose whatever my trailing drawdown is minus 20. So it's the solution to that is either keep trading very conservatively but with relatively high size and take profits very quickly until you build up that buffer in the performance account so that your trailing drawdown pauses, and then you can go back to a trailing stop style. Or you can get in with NQ, take your profits as you go, and then if the market continues, you take your trade off, like up here, and you switch to micros, right? And by switching to micros, when the trade really runs like 100 more points, you still profit something. But the good news is when you actually trail out, that trail, it's not going to be 20 points of your regular size. It's going to be like maybe a quarter of that. So it's not going to hurt so bad when it pulls back. So that's what I did here. Is I'm still in 2, but they're micros. And so you can see, and that's my average is here at 111.45.63 after an ad. So I had gotten long earlier on here. It's kind of hard to see because, like I said, I was using my account through Sierra to do this. Here we go. I think I can do it that way. So on the oh wow, it moves with me. That sucks. On the Renko, the Algo, what we see, it's a little bit busy. But here, you know what I can do? I can look at Simon. So the level is 1114450. So here, we'll do it this way because it won't be here. So I don't think. Yeah, cool. 111 40, right? Something like that. Was it 40, 50? 111. I've got 45. Yeah. Oops. Okay, so the average after the add and the taking profit is like, oh geez, is like there, right? I believe, give or take. It's not, it doesn't really matter, but yeah, close enough. So the way this worked is we opened here after a gap up, and so what I saw structurally, here, hold on, let me just fix something. These triangles are way too big. I don't usually use, he just sent us out a new one and I haven't been able to fix these. Yeah, that's like entirely too large. Hold on real quick. Let me fix this. There we go. I like them smaller. Otherwise they get in the way. Was it 7? 6, or maybe 5? I don't even remember. Oh no, 6. Okay. Okay, so what I saw here was, first of all, a gap up, and when they tried to fill that gap, they failed. Like I mentioned before when we were looking at the candle charts, this is the same thing on the algo. So they open the gap, they open gap up here, and then they rush up as sellers. Remember, pink means sellers are pulling their orders from the order book, and so you don't need a lot of energy to push these up. Sometimes you get it anyway, but you don't need it. These are often retraced fully. The pink bars, just like the purple bars are in the opposite direction, are usually fully retraced. So it's normal to get this retrace, right? But when they couldn't close a Renko bar underneath this first pink bar, and you get the volume shift, which on this chart is a green box. On my chart, it's a green bar. That volume shift right there is your sign that things are looking bullish. You really don't want to chase up here, right? You don't want to be buying these pink bars, but what you can do is, especially when this next pink bar has a triangle on it, suggesting that there is some follow through, so it's basically a squeeze. What you can do is you can actually mark off that zone and then look for a pullback in there. It doesn't matter which one you take really, but the idea is you want to be getting a pullback in there. And then what you can do if you buy the pullback is you can actually put your stop underneath this volume shift. And so it's a little bit big of a stop, right? I wasn't able to take 3 NQ contracts with that size stop, but I was able to put about half size on using micros. And then I was already able to hit my first target here. I got 12, right? Just because I always take profit at 10 to 12. And then they pulled back. They didn't hit my stop. They came really damn close, but they didn't hit the stop. I always go like a point or two underneath the low, just in case they kind of whoosh. And then as it came back up, I ended up adding, but I didn't. I should have added right here on this star. That was the right place to add. I was a little bit late and ended up marketing in a little bit more into this pink bar, which was, it's not the way you're supposed to do it, right? But the way I saw it was that I got my entry on this pullback and here, right? And I'd already taken one, so I was like, hey, I'm gonna get a piece of that back, and I'm still not up to where I took my profit, so it's still like fair game to add here. So I went ahead and added, which moved my average up quite a bit, and then it pulled back and continued. So it was a small overall trade, but it was the concept was there, right? Like it was all correct, except for maybe this ad being a little bit of a chase. What probably would have been better is just leave. My initial entry was here, and I should have just, once I identified that this pink bar was coming in after the star, right? That kind of a move is pretty strong as long as they hold this low. So if I'm comfortable putting my risk here, what I can do is I can just put this, like a couple micros, I can put that size back on at my initial entry, And if they pull into it, it fills me there. And it's as if I just like stole 12 points and got my full size back for the longer run, right? So then what I did for the rest of it is I took profits as we broke over this, because that's all. If you're going to find, or if they're going to find sellers, it's going to be above a swing high. And so as it sped up here, I took some profits, and then the other two I just left two. So we'll just kind of see where that goes. But anyway, I want to trail both of these. So now that we've kind of pushed up a bit, you can see that you don't want to put your stop way up here. That would be not a good plan. But you certainly can. I mean, this is the most natural place, is behind these little pivots here, right? That's really that's where it belongs. But if you're seeing, so what I'm seeing here with the algo, I've got additional information like order flow information. So these X's are something new I've added, and these are basically it's an attempt to get aggression in where there's a lot of volume. So if you watch a footprint, I'll show you what this looks like. So there's one to the downside here. This one came in the middle of the bar. And then there's one to the downside here, right? Those X's, right? So now we're going to look at the footprint here. And I'm going to show you what that looks like on the footprint, because I think this is interesting. So we look at volume to tell us whether or not we should trust price action or not, right? When you have volume coming in with a move, you generally can trust that move is legitimate. But oftentimes, especially in futures, and particularly when you're not breaking out into a new range, getting a lot of volume in an area is not always a good sign. It can also mean that someone's trying really hard to hold an important level. And so it's because of that, if they think it's important enough to defend with a lot of volume, you might want to pay attention if that area gets taken one way or another. So once we had these two big sellers in here, right, I know that there's some really heavy volume coming in down here, and then they went a little higher, and you can see all the volume here is a little higher. See that? How all the volume here is lower, right? This on the down and this on the down. And then in the up one, it was down here is where the selling was, right? All of that is heavy volume. Now look where it shows up on the very next bar. It's above where the heaviest volume was. See that? This was the heaviest volume. We got above that, and they put more volume in, right? So that alone is not enough to buy, but what ends up happening is if you can break above this and you can hold above it, what it basically means is these sellers are now trapped. So it's relatively safe to now put your stop down there once you've broken out, because if they got through that zone, it means that these sellers have already covered, and they're no longer trying to get even on a pullback. Because what ends up, the reason it holds is, let's say that they're short sellers, right? They're selling aggressively here. They get offsides, and every time the market starts coming down, what you're going to see is big pushes of volume. Big push of volume, right? That volume is going to come on the pullbacks generally. And what that is it's these short sellers who got offsides recognizing that the order flow on the DOM is flipping to go higher. They're getting absorbed basically, and they quickly cover, right? So as long as that behavior continues, this low is safe. It's not forever, right? But you can watch on the footprint or on the DOM or on the algo, and you can see whether or not you're getting aggression on the pullbacks, right? And as long as you are, and you've had this trap set, it's relatively safe to hold a stop and trail. So what this looks like on the algo, on my algo, is these X's here and particularly when they have an aggressive signal, so like an orange bar, a star, or there's a purple diamond in the back here. I've got to move the X so I can see both. I'm just kind of experimenting with how to mark this, and I forgot that I have another signal that's sitting right in that same area, and you can't see it because it's behind it. So I just have to move it. I'll fix it later. But I'm still experimenting with how this works. But the idea of it was that you don't necessarily do anything, especially if you're going against the trend. You don't do anything on this bar, but by getting beyond where all the volume is in the bar, and then when you see how it's now blue X, which is the exact opposite to that, and then there's another blue X up here. So that's the same thing, only inverse, right? So we've got big seller, big buyer. Oops, big buyer is here. But look where the volume is on the big buyer. It's lower, right? So price went lower, and that yellow line is where all the volume is, right? And what it's telling me is this bar had exceptionally strong and aggressive volume. Not necessarily price action, but volume, right? And they tried to hold this level. So here the sellers held it, here the buyers held it. But look what happened to volume. They went lower, right? So what you'd expect to happen now is selling, right? Because volume went lower, buyers bought it, and then, oh look, the sellers show up again, right? But look where their volume is. It's up higher than this one. It's over for sellers once you see this volume increase above this. So once that yellow line overtakes this volume right there on this cell, this second cell, because this volume was lower and that was heavy, and this volume was lower and that was heavy, this is the highest heavy volume, and it was to the sell side, right? Suddenly volume goes a little bit lower and buyers defend it aggressively. You get a close up high, that's great. But the real sign that everything's over is the actual volume showing up higher than all of these, right? All of this volume was like the battle, and then this is the spoils, right? Once that battle is won and you get volume above all of that, it's over for sellers. Now, the scary thing, I guess, or the other side of that, is that the exact opposite can also happen. So you can get the same kind of pattern, but rather than getting this, what you get is buyers giving up and then a big aggressive sell bar coming underneath these X's. Sometimes you'll even see the big aggressive seller show up here after the second X. You'll see a seller show up here all of a sudden really aggressively with like a yellow box or a star, something that shows some really aggressive like attempts to turn the market to the downside. And when that happens, you can't buy it, right? You don't want to buy against aggression. You want to wait and see what happens then. But if you get this pattern where it's big seller, big volume down, they try to defend it as volume drops, then volume rises and they put in another, they fire another bullet, right? And that even though volume drops, buyers show up as the winners, it's a buy, right? And I can show you that pattern elsewhere, but it's just something unique that I've noticed it on the algo, just watching this yellow line and seeing this kind of pattern where you get big drop, slight drop, big rise, slight drop. What's next is usually big rise, right? As long as the overall price action is bullish. Now, let me here, I'll show you where else this shows up. So if they're all by themselves like this, and it's already identified that you're going lower, all this is saying is that this guy is actually your big seller. Because look what happened to volume. It was already dropping. They come up. They try to buy it. Sellers defend. See that? So here you know it's done. Because you're already going down, right? And they're just holding that level. So that X there is your typical high volume breakdown, right? That's where it can be sold immediately. And you can see it comes in with a star because there's also an aggressive volume, there's an aggressive price action shift. So it's an aggressive volume shift and an aggressive price action shift. Here's what it looks like. Here's the example, similar example where they try to hold a level and fail. So look, here's the big volume shift down. That ends up getting an extension. You might not know that one's going to work right away. But look, this one either, right? You don't know what this one's going to do, but look where the volume is. It's way up here, and that's where the sellers are trying to defend, right? Price does go down. What happens when they come back to that level? they show up again with a heavy, heavy, heavy volume. So guess what? If you can get volume back up above this, it's done for them. It's over because they've put all their bullets in. So see this pink one with the triangle up? It's got a volume dash where the little yellow line interacts with the bar. It's above this bar. See that? It's gone up. It's over. See that? So like I saw that over and over and over again, just watching the yellow line. And I'm like, I gotta mark this somehow. That's a super cool trade. And so when I saw it show up here in the basically exact same way as I always see it, where it's like seller, 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 give up, right? I was like, okay, I'm just gonna take this in my cash account and see if it works out. But I took it, like I said, with micros because it's a totally new idea, and I'm not gonna blow up a Apex account with a new idea after I've been working on them for like a couple weeks. But I'm willing to trade micros in a cash account and kind of experiment that way. So I guess I could have done it in evaluation, but I didn't want to take it in the. Yeah, I felt comfortable enough to take it with micros. So that's that. Anyway, I promised to do some analysis on what I see for the week. So what I do on Sundays, in general, is I start with the candle chart. Okay, and I use whoops, I got this way too small. So I usually start, because I watch the market pretty regularly, I rarely look at the bigger time frames on the futures charts. I will occasionally peek at them if we are doing things like this, like where it's range bound for a long time. All of a sudden then the week and the month candles do matter quite a bit, because if you can get closes above some of these highs, you can see a breakout to the next one, right? So in that sense, it is important. But if you watch markets regularly, you're gonna have a sense of what this probably looks like, and you're gonna know where the highs are anyway, right? So you don't necessarily have to do a lot of analysis on the weekly and the daily chart, in my opinion. Swing traders, I swing trade too, and I hate hearing that from myself. But the truth is, it's just the way it goes. Like you're gonna want to look at it, but if you really do follow the markets carefully, you probably can picture in your head what this looks like. If you're used to watching something like this, like you can do the candle math and you can see like the important highs and lows. I'm not all that concerned with like exactly where the day closed. I'm just not one of those traders that finds that all that significant. I mean, it is kind of cool when it like aligns with the Voodoo range levels, but that doesn't really matter, right? Like that, like this is kind of cool that it like sets right up right there on like an extension of the Voodoo range level. But is that actually relevant for trading? Like probably not, right? It's just kind of a phenomenon that tends to happen a lot. So from this chart, you can see we've obviously been in a bit of a range, right? We've been stuck here, and this range, obviously, if you haven't been paying attention to NASDAQ, is significantly lower than where we were in November. And the October low is here, right? So we are trading above the low of last year. But if you look at the lowest close, daily close, it's this one. See that? And that's almost exactly at that 10.88575 level, right? And so this low here went lower than that low. Does everyone see that? All these other candles are green, right? Anything else that went under it are green, 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 except for this one, right? That's the one that closed the lowest. And that close, if you look, is the actual close. Oh shoot, I can't see it. Is 10.772.75, right? So pretty close to the 10.773.25 Voodoo range level, which is not an accident. It's just the way that the math works out, right? So I want to be aware of that level, and I want to keep I should have been keeping an eye on it since this day, right? Since the 28th of December. It was Wednesday. It's been a very important level since then, right? The very best trade you could hope for would be to test under this low and close higher than both this low and this low, right? That would be your best mean reversion opportunity, in my opinion. The only other trade that would be better than that would be a significant retracement that you want to short, or a breakout and then a pullback that you can buy, right? Well, what we saw on Friday, if you mark that, why isn't my, it should be, okay, hold on, I know how to do it. There we go. So that low, if you see, it broke. Okay, it didn't quite break this one, right? It could have, if it was just a little bit lower, it would have been better, but it got very close. But it did break this low, this important low. And then look where it closed. It closed that day, Friday, closed above not only that, the low day's high, right? The day that hit the low of this month and tested under here. It closed above that high, right? Up here. It went up from there. But also, what's kind of even cooler is if you now go back and remember this one, right? The really low, right? That was an up day. See that? So which high do you think matters on that day more than anything else? On this, sorry, not on that day, of this rotation, right? I gave it away. It's the answer is this high matters more than anything else, because they closed higher and tested way lower, and so this high here, which we can mark, becomes even more important than this high, believe it or not. Now you'll get reactions from this high, right? But when it comes to breaking the downtrend and seeing changes in not breaking it, not reversing it for real, but like not like long term. But if you're a short term trader like me and you want to get opportunities for long rips, what you need is to test below this level and then reclaim it. See that? Test below this level, reclaim it. Right? Test below this level. Where do we reclaim it? Right? So that becomes important. Now look what happened over here. Tried to break the level and failed, right? Then we reclaimed it here, right? So that you'd think, and I did think, should be bullish. And the very next day, Thursday the 22nd, they tried to break above this, and sellers defended this level. So I've marked that with red because this becomes an extremely important spot where sellers defended an area for the first time that they had repeatedly given up, right? You don't know how long these are going to work. 2 times is about right. Sometimes the third doesn't work, right? But what's funny is it doesn't mean the fourth won't work. So that level is actually still important. Everyone else is going to have their line up here, right? Which is fine. I've got plenty of lines, and I understand why you'd want to put your level up here at the swing high there. That I get that, right? But believe it or not, this doji candle is just as important, if not more important, because after this breakdown, they couldn't break back above. They couldn't even test above this level on that day, right? And then the very next day, look what they did. They actually gapped down. Or no, sorry, they gapped up, right? They tested down, and then they broke this. That should have been bullish, right? Gap down, gap fill, rip. This should have been bullish this day. And instead we got another move down. So when you get something like that where technically you expect it to reverse, but it doesn't, what it generally means is that either this next breakdown is the capitulation move that basically everyone's going to get stuck by, or that there's a really big extension coming and that this is like only halfway there. Right? You don't really know which one it is, but it basically either means that this trend, this beginning move here, is a lot stronger than you thought it was, or it's basically done, but they're going to push everyone one more time just to make sure all the bulls are out, right? And from the looks of Friday, I'm going to go with the latter. I think that they've actually finished most of this down for the moment. Maybe not the whole year, but for the moment. I think that this was actually just a almost like a trap, right? Like a little bear trap. And that the proof of it was right here. Because if it was really, really bearish, what we should see is this level should get totally annihilated, right? And it couldn't even get touched. So that doesn't look bearish to me. That looks like the end of a bear wave, or whatever you want to call it. Just a little bit of capitulation. And then if you look at volume, volume also confirms this. Look at this. You got big volume here. It's not on a breakdown. It's on a day that was like, it just broke down underneath these daily lows, right? It's just everybody. And why did that happen? It's because it was the beginning of the year, right? Everybody who had done their window dressing at the end, just like making movements so that they look like they were in the right place for the end of the year, they all shorted most likely or sold out of those positions on the 5th because they didn't want to take a loss. And then here too on the 6th on Friday, they sold, right? Thinking that, oh, I guess this trend here is really, really strong and I don't want to hold those positions that I basically just bought so that I could show that my fund is in something that did well, or not as badly as maybe Tesla in 2022, right? So maybe they buy a little bit of something here and then they're just like, you know what, I don't believe in this bull trend anyway, I'll just sell it. Well, what tends to happen after that is actually really big rips. And so my target's actually significant. I'm not usually this bullish, right? But this pattern, especially with the high volume down there, is really strong. So my initial target is actually 11,392. I do think that gets hit relatively quickly. Like maybe even Monday, if not Tuesday. I do believe that this is in range here. Okay, we'd have to go 1, 2, 3, 4 voodoo ranges up. So it would take a trend day to do it. Usually you can move 3 but not 4 without a significant trend. So I'm guessing to have this happen, you'd need a trend day or a really big gap up and then a balance day here first and then maybe a breakout. But I actually have my target set up here, believe it or not. I think that what we should be looking at, and you're going to call me crazy if you're super bearish. And like I said, I'm not saying that the low's in for the year. I'm just talking about the next week or two. I think this area here needs to be re-auctioned personally. If you look at the fixed volume profile for just this range before they broke out, what you see is a huge anomaly here. See this big hole right there? So more or less, it's right there, right? We're going to color this. Well, I already have yellow for the voodoo range level, so let's color it orange. Okay, so significant low volume node there, right? And if you look here, this is a B profile, basically. If you think about it from a bigger picture, what would that mean? Well, we're in a downtrend, right? If it was a short covering rally, what we should expect is a big pull here, and then all the volume at the high that then gets wrecked, right? But instead, there's actually no volume up here. See that? There's no volume up here. So what is that? Why would that be? Well, the reason, in my opinion, is because we ran into an area that everybody expected to act as resistance. Here, I can turn off the voodoo range levels because it's distracting. So everybody expected this visual area here and below here. Man, I can't get it to snap. I like how in Sierra Chart it snaps up there. And in TradingView, I guess you have to do it with your keyboard to make it snap. Or maybe there's another way, I'm not sure. I think if you hold on Shift or something, you can do it. I forget. It's okay. But this zone here clearly had sellers dominate, right? And so when they came up and hit that and there was no volume there, and they couldn't break above it, they sold it off, right, back into the high volume area. And then they did it a second time, tapped it, and found sellers sitting there. And then they came up, they hit all the sell stops, and then they wrecked it, right? On what day was that? Tuesday the 13th. Totally wrecked it. And then Wednesday, and then the breakdown, right? So what I see here is obviously that was bearish, right? When you've got sellers sitting at the top and they rip up above the high and then reject it, that's obviously it's bearish for the time being, right? Like medium term, that is bearish, and it could have led to a bigger extension lower if it was strong enough, right? It should have gotten us significantly lower, and I guess technically it still could. But when we get this bounce down here, assuming this holds, and I think it will, what you'll usually get then is a return at least into the anomaly here at like 11,800, if not a little bit higher than that. And potentially, what they'll try to do is hold up here and put in some, like a breakout, a pullback to repair. So it'll look like this. It'll go here, right to there, and then it's gonna catch everybody. So and then everyone will be bearish for like 2 days. Then it does this, and they're like, "Oh, well, now we're back to the resistance." So I was bearish here and I got stopped out, but clearly now we're at resistance right now, and now they'll all be selling. And then what it'll do is it'll come back right to this volume area, the value area, right there, and then it breaks out only, and then when everyone agrees, oh, it's bullish, get out of your stock, get out of your shorts. Right? Now it starts to go sideways. And at that point can now go lower, right? So that's what I kind of expect, but I'm not you don't really, it's hard to go very far ahead, right? That's just with like all the macro stuff involved, that it's hard to imagine that a big breakout actually holds on a pullback, but it might, right? This part I'm actually extremely confident with. Beyond that, I do not know, right? Maybe we'll just squeeze like crazy, or maybe it'll just fail and we'll roll over. I don't know. But when I see this on Friday, and then when they open slightly higher and they don't immediately reject that, it might not go up in a day, but I'm going to assume that even if they do pull back here, I'm a buyer down here. The lower the better, to be completely honest. The lower the better. And then all you need to do is make sure that you don't close any days under this. The problem is if you close down, so if you get a close in here, if you get a close like tomorrow somehow, they like, or I don't know, on some like Wednesday or whatever, if they come down and they close above the low of October, but below the low of December of last year, it's not going to bounce right out of there. It's, in that case, what's going to happen is they're going to do this. They're going to bear flag and go lower, most likely, right? So you don't want to see that if you're bullish. What you want to see is any pullback here is gentle, if any. And then we get a nice big move out of here. Maybe not that fast, but you get the idea, right? Gets up here, maybe pulls back. The slower this goes, the more healthy it is, and the more confident I will be to hold my calls that I bought last week. But in the meantime, when we don't know what's going to happen, in the meantime, what I'm doing, I'm not going to be a short. I'm not going to be a seller, right, for futures. I'm not looking for shorts because the shorts got absolutely destroyed on Friday, which I can show you on the algo. It's fascinating. they got totally ripped up on Friday. And so even if we do get some bearishness up here, what we're going to end up getting is these guys who got stuck, they're going to start supporting the market. And so if we get a pullback, most likely they're going to buy it. And yeah, so all right, so enough with the daily chart, right? That's as far as I'd really go with the daily chart. If you want to find levels on the smaller time frames, obviously you need something more than just candlesticks. You need order flow, you need volume profile, or some other system, right? Other than just candle highs, candle lows, candle closes. They're important, but primarily for the daily chart and above. Below that, you're much better off using something other than just the high, because if you're making, it's helpful to know where the high is, but it's primarily to get sells, right? And it's helpful to know where the low is of the day, but it's primarily to get buys. That's how you should be thinking about it. Like, don't think that you're bullish as long as that holds, right? Because otherwise you're going to sell absolutely the worst time. I'm not saying not to manage risk, but realize that like you're actually better off buying down here as long as they close back higher. So if you want to buy down here and they don't close back higher, well then you know you're wrong. But if that's the only way I'm really thinking about candlesticks, honestly, is like who's getting stuck here and who's getting like tricked, right? And then you can also pretty easily see momentum with candlestick charts just by and volume. Like here we broke out, right, out of this consolidation. We broke out and volume increased, and then we got a volume decrease for this candle here, but look where it closed, right at the high. So in this case, I would not even consider this as a problem. That is an anomaly of being a candle based on time. It's small volume, right? But it's only small volume because the candle had to close. We just ran out of time. So a lot of people shorted this because they saw this, and this was also evident on the hourly chart, right? They saw this breakout here, and they're like, oh, decreasing volume, right? I should short it. No. Don't do that. That's wrong. I'll be completely honest. That is completely wrong. Do not just short because your candle closed with lower volume than like the open. Like that might work on like penny stocks or something. I don't know, but it's something a lot of people do wrong. That's not correct. You need to remember that this candle only closes there because the session ended, right? The 1 hour. The clock ticked another minute and it just automatically closes. So you can't just look at this and be like, oh, it's really low volume, so I'm just going to sell it. It's like, no, wait until you see what happens in response, right? So rather than selling here, because you see decreasing volume, don't be the seller here. Be the seller when this guy with the big volume, after he gets confirmed to be correct, right? So for instance, if you then get a breakout to the upside, and then they reject up here, let's say, like right now, it might do it, right? Break down, and then they get lower than this, and they close lower than that, or at least they get some volume underneath that, right? Another big volume candle. Now, retraces can be shorted. Now you might get a real pullback. But you're not going to have very much success if you try to short this because you think this volume is weak. And so the first sign of aggression, I'm just going to short it. I mean, unless you're only looking for like 5 points, that's not a great strategy. And I also don't recommend just shorting because we hit a high or something. You need something more than that. And especially don't do it when all the volume has been bullish. Right? Not a good idea. So like, yeah, that's just general recommendation for how not to mean reversion trade. Like you don't, that's not a very good strategy. It's something that intuitively might make sense, but it's just not the way the market works. Like you may want to just see it drop all of a sudden because there's low volume here, but the truth is that there's not low volume here. It's not. It's still, see okay, if you look here, you have to look to the left. See this? As long as all of the red candles aren't bigger than all of the green candles, then the buyers are doing fine because price is also going up. And so if price is rising and there's low volume in general, that's not weakness. That is a sign that sellers are just giving up, right? Don't be a seller when every seller is giving up. Be a seller after that when those sellers come back into the market, right? You want to, it doesn't matter that you're not getting short up here. Who cares, right? Let them send their best soldiers in front and then like run behind the blocker, right? Like you'll get a retrace. Maybe it won't be a big retrace, right? You might, but I can't tell you how many times we've all tried to short this and this and this and this and we've all done it, right? And then right when it finally starts to calm down, you're like, well, I give up. I'm just going to get long, and then it finally tanks, right? Well, the reason that happens is because you're thinking about I don't know, like at least for me, what was happening when I was doing that, and I was definitely I was horrible about fighting trends, right, for a long time, as a day trader especially. And what ends up happening is you basically got FOMO because you missed this big move. And most of us know that buying up here would be a chase, is the thinking, because we should have gotten long down here somehow, right? So we think, well, I can't buy it now, so therefore the only way to get involved is to sell it. But then you sell this little tiny little breakdown and you get absolutely crushed. Whereas really you could have just been a buyer here or here or here and actually made, 30 points. Which, sure, it's not the same as the 200 points that you missed out on, but add enough of those together and it'll be meaningful. It's okay that you miss some moves, right? I only traded for 90 minutes on Friday. I missed the majority of that move too, right? But that's fine, because there's been plenty of times where I was going for a little reversal for 15 to 30 points, and suddenly it rips 50 to 100, and you hit 3 days of profits in like an hour. That's all you need, you guys. Like, don't be greedy, right? Let those days show up by getting in the market at a time when you actually have a chance to win, rather than seeing this and being like, God, I wish I would have gotten into this. I want to be in the market. Let's see if we can get a retracement, and I'll just sell this tiny little breakdown, even though it makes no sense, right? Like, so yeah, you just got to make sure that you have your strategies down. And if you're gonna trend trade, that's fine. Just have rules for what to do when your breakouts fail. But if you're gonna mean reversion trade, stop doing it when you see this. Don't fight that. Right? That mean reversion strategies will not work to the short side here. The good news is the exact same technique that you're using to try to fight this trend, if you invert it and just buy it there instead, you're going to do fine as long as it's trending up. Which is crazy, right? The time that you think you're fighting the trend and it's not working, those sells are probably almost exactly where you should be buying to join the trend, right? So think about that, right? The times when you get, particularly maybe your stops on your really aggressive mean reversion sells that you're using maybe against the trend, that's probably the buy spot, right? So just so you know what my colors are quick, these light purple, those are found on a higher time frame, like a 2 hour or 4 hour. And what these are, I teach this in my Voodoo range video, but basically what we see here is this bar here, right? And then the next bar, they have to have different colors, right? One's green, one's red, or one's red, one's green. And the volume needs to be decreasing for 3 bars. So the one before it needs to be the biggest, and then this bar needs to be the next biggest, and this one needs to be the smallest of these 3. So see that decreasing volume? And then range needs to be decreasing as well. So the second candle has to be smaller in range than the first one. It's great when they're inside candles like this, but they don't have to be, right? They just need to be smaller range. So when I find those decreasing volume and decreasing range pivots, I mark them, and then what ends up happening is they act as resistance later on. And if you can break them, usually on a trend day or with strong momentum, they end up then acting as bounce points in the future. So if we get pullbacks into this zone, like if we break out here and we pull back, it can actually bounce right off that, right? So the higher the time frame those are found, the more significant they'll be, because they'll influence the higher time frame, which are obviously more significant. So there's another one right here, right? So we have volume decreasing. See, green is biggest, then green after that is second biggest, and then the red one is the smallest, right? Decreasing volume. And then the two that are the different color, the red and the green, the second one, the green one, is a smaller range than the red one. See that? So decreasing volume, decreasing range. So this area here is marked. It's taken by the bulls. It's then taken by the bears. And we have not reached it yet. Okay. And that is 11-208 to 11-245, let's say. Now these are going to be big because they're based on like the 4 and the 2 hour charts, right? There's another one up here at like 11:45 to, or 11:435 to 11:475. That one is based off of these two candles here. So see, decreasing range, decreasing volume, and then decreasing range, right? And then it acts as resistance right there. So that's how that works. They don't work forever. Eventually they just get traded through and it's as if they don't exist. And at that point, you just delete them, right? So the light pink is from the higher time frame. The dark purple is the same exact concept, only on smaller time frames, usually the 30-minute chart. So here, the lowest one, we have these two right here, decreasing in range, right? And then decreasing in volume. Smaller range, the two, and one's red and one's green, right? And then that becomes support. Now remember, it's not a brick wall, right? It's just an area to expect some bounces on. Bounce, bounce, right? And when they do that, when they start to like go higher and higher and higher, you want to watch this level very carefully because it can become the resistance on the way back up, or you can get like a head and shoulders type action if they give it up. So here they do give it up, and see how they're trying to use it as resistance? That's very normal. So here you'd expect lower, right? And you get a little push with plenty of increasing volume, right? Here, increasing volume, yet they can't close below. Look at this low. They test below it, but they can't close below it, even on a 30-minute chart. That's bullish right there. It's coming back to the purple pivot. See that? Reject. They get under it, right? That looks bearish. Everybody shorts. Data comes out, everything changes. Look where they bounce this. Boop. Right? Now when we turn the Voodoo ranges back on, what you'll see is you don't even need that level because you get the exact same reaction to this. Right? Bounce, reject, bounce, and then reject. See, so you don't even really need to do all the analysis. Once you've got the Voodoo range levels, you just kind of have to learn how to observe them and they're, like I said, they're for, or if I didn't say it today, I've said it before. They're intended for analysis and for short-term reads. So, for instance, when you are in a bull trend like this, once you get this breakout and it sustains on a pullback here, right? When that breaks out again, this Voodoo range level that it went through and it used to be resistance, this is now support. See that? And so once you get this candle, you just buy it, in my opinion. I didn't tell you that, but that's what I'm doing. But you can see if you try to just buy it right here and you put your stop right under it, you can get swept out, right? You have to wait until it acts as resistance first, breaks out, confirm the trend, pulls back, and holds. I want to see this hold, right? If you want to wait till this breaks out, cool. I don't care. Do whatever you want, right? Otherwise, just take the stop and then wait for the next one. But see what they did here? Broke out. And I want to see, can they hold this now? Right? It doesn't have to be the tick to the tick. But I don't want to see sellers show up down here. So if I want, I could actually move my stop to like 45. Right? Unless I am afraid I'm going to get like stung by a pullback. But give or take, that's what I would expect, is that like 45 would hold. So now let's go to the algo, right? And you can see that would put me with the stop at about break even. And so we'll do that. We'll put the stop at break even. Trying to see where that actually is. Yeah, I want it underneath that pink candle. Yeah, so if this pink bar gets fully retraced, I'm going to put it underneath the little volume here. So Sierra chart can be very finicky. Yeah, but wrong way. No. Okay, there we go. Give it just a little more space. All right, so the dashed lines are the Voodoo range levels. So you can see we just put a pink bar above it. That's really not enough to be confident that they're going to continue. And then they tried to push down with big volume, with a volume shift is the orange. They shifted volume down with a lot of volume. Look at what it looks like on the, so on the footprint, what it looks like is way at the top. They put in some big sellers, and then this is the biggest one, right? So all up here are your big sellers, and then price went down as well in response, right? You'd think that's bearish, and if it was a bearish trend, that would be bearish. But when you're in a bullish trend, stuff that looks bearish is actually not always bearish. It's actually just the sellers getting active. And so rather than just thinking that every single time you see an orange bar with a purple diamond and thinking that's got to be bearish, or every time, if you're using the footprint, every time you see a big volume push at the highs that closes lower, thinking that's immediately bearish, you have to think a little more dynamically than that. Instead, what you can do is say, okay, if this is bearish, this should be defended, right? So if we start testing up here and rejecting and rejecting and rejecting, that would be pretty normal for a bearish trend, right? Or if we trade underneath and then come back up and run into resistance there, it's also pretty much what you see in bear trends, right? In bull trends, when the bears put up a big fight like this, what bulls usually do is they absorb it and just go higher, right? So we can look back, and I'm sure we can find, so look, it's a pink bar followed by an orange bar with a purple diamond, right? It's a pretty strong, there's one right here, pink bar, orange bar. There's a purple diamond back here. You just can't see it because there's an X on top still. I haven't moved it, right? So if, and this is the one I was talking about before, if you thought that was bearish, which it should be, then you should not see price push back up, and you definitely shouldn't see aggression to the bull side when they do attack it again, right? And here, I'll find another one. That's maybe, here's one. Pink bar, orange bar. There's, if you look real close behind the X, there's a purple diamond back there. It's hard to see. Once the red X is there, it doesn't really matter, honestly, because the X is more meaningful. But look what happens after that. Buyers push right through it in 2 bars. See that? Guess where the bears now are stuck? Right there. Right? Now the bears are stuck. They come down. They immediately aggressively respond with aggression to save that spot. They try to push again. They immediately respond with aggression. Guess where look at where they try to respond again. They're trying to take that back, right? Immediately respond with aggression, and it's over. That spot is safe. Probably not going to get tested again, because an aggressive seller came in and got stuffed. And when they're off sides, they don't like to lose money. So when it comes through here, they aggressively cover, right? And then that area just becomes an absorption point where all the buyers are collecting. Here's another one. Pink bar, orange bar, purple diamond. No X on this one, right? What happens here? Here's where everybody gets, here, I'll draw it with a, so here's where the volume is in the bar, and here's the low of the bar, right? Most of the sellers are right there. They immediately get destroyed, right? Totally offsides within moments. Okay? Look what happens to that zone. They get into it, they immediately reject. They get into it, they immediately reject. It's not bearish. Okay? When it is bearish, I'll show you what it does. When it is bearish, and you get the exact same thing, same 2-bar combo. Oh, here's another one. Pink bar, orange bar with purple diamond. Lots of volume coming in there, right? On the footprint, I know, like, it seems like it's mysterious and stuff with like the algo, but it's just this, right? It's just price is going down, volume is going down, lots of volume up here, right? Usually pretty bearish. What happens? They immediately reject and go higher, right? And you can take, here's where all the volume is, here's the low, they get in there, they immediately reject it. Now look, to be even, let's see what happens when we return there, out of curiosity. Oh, did we not make it there? We didn't make it there yet. But you'll see that it'll actually act as support later. If we do get back there. Let's find a bearish one. I'm below price. I'm not below price. Where the hell is price? I am below price. I must have almost got there. Oh my god. You bastard. Come here. Where the hell is price? There it is. Okay, it's just too close. Let me back up. Let's find a bearish situation. Here's one without the purple diamond. I want bearish environment. Bullish. Here it is again. Bullish, right? They try to push down. Once that area gets rejected, it becomes support. Support. Sometimes they sneak under it, but they are absorbing there, right? Buyers are absorbing, and it takes off. Okay. It was bearish not that long ago, right? There'll be one. Okay, here we go. Okay, so it starts to, we get an aggressive seller. We don't know it's bearish yet, right? I don't think. Let me just double check this. Yeah, we don't know it's bearish yet. It looked bullish here, right? So it starts to, they get a push down, right? You don't short it yet. You see them try to defend, right? These are the big volume defenders. Like you can think of them as blockers, right? In like a football game. They come up, pink bar, orange bar, volume, okay, on the footprint. It's the same exact thing. Volume shifting down, all the volume is up where price was before, right? And now price is closing down here, right? But all the volume is up here on the bar, and it's shifting. If you look here, that was kind of fast. So price and volume used to be up here. See that? That's where all the volume is. Price got all the way up here. They got trapped. But volume was here. Volume then got down to here. And then it's shifting down. See how it's like dropping? Right? That's what that orange bar with the purple is saying. And coming after a pink bar, it's especially powerful because sellers were just giving up 1 bar earlier, and suddenly they're aggressively defending. And so there's usually a reason why. In this case, it was because of the point of control getting tested. But look what happens when it's bearish. It comes down, and that area here becomes resistance. Pink bar, orange bar, purple diamond, blocker, right? So now we have a blocker here. We got someone defending the area. So we're going to mark this. If that area continues to have sellers, any aggression to the downside is going to be sellable. Watch. They push up. They have to hold this, right? Sellers have to hold here. If they can get that bar above it, it's over. See how they defend? Oh. They got over it. It's over. See that? Okay, now what's going to happen? It's going to be support. See that? Sellers got under it. Let's see if they take it back. So look, we have to recapture. This guy got trapped, right? He got trapped down here. They tried to squeeze. They ran out of energy, probably at a higher time frame. Looks like it's a high volume or no low volume node. So low volume node got tested into, they rejected. So the higher time frame probably looks pretty bearish right here. They come down into this big heavy seller. Buyers try one more time to save it. Makes sense? If it's bearish, this aggressive seller will have success. He tries. They take it back. It becomes support and it's off. See them get squeezed? So you have to be dynamic, right? You don't know when it's here, you don't know whether or not that, or this one too. This is the same exact pattern, right? You don't know whether or not that's going to be successful or not, right? And you could just sell every single one of them as long as it's not an uptrend and do okay. Every one of these little 2-bar combos you see, you could just sell them all as long as it's not an up market and you do fine. But what is way more powerful is rather than just selling them, noting it and being like, okay, here's my line in the sand, right? As long as we don't sell under this, I can be bullish. And if we can't buy over this blue line, I can stay bearish. And now you know exactly what to do, right? So you wait. Okay, they sold underneath it. We don't want to be bullish yet. You get another one. Now I can move this down, right? Stay selling under this, and we can get 10 to 12 points to the downside way easier than we can get 10 to 12 points to the upside. Where do we know we're wrong? Probably right here. If we get back up there, we get back up there. We know we're wrong, right? At that point, it's like, okay, it's probably bullish. They're getting trapped. Now let's see if we can buy down there. If we didn't take a trade, whether or not we did or not, that's where they should try to defend. Maybe you take that one, get 15 points. Maybe like you might take this one and get hurt, right? But as long as you came back when they reclaimed it, or here, you'd make all your money back, right? So that's the thing to keep in mind is that sure, you can just sell every one of these and maybe make 10 points, or you can just watch for when they get defeated and know now that that area is good to buy as long as you have aggression and get paid more, right? I don't know if I'm making sense, but it's just a way to think about whatever you're doing to get into trades. If you're not catching the really big moves, that's okay, right? As long as you're being consistent and you have a high win rate. But if you don't have a high win rate and you're not catching the big moves, it probably means that you're acting too quickly and you're trying to trade every little twist in the market rather than taking every piece of information that you normally trade on. Like if I just shorted this and instead I said, hey, it's bearish. If they develop under that and we can't take it back, it's probably bearish. But if they take 11,178, I definitely don't want to be a seller, right? And maybe you don't want to do it with just price. Maybe you do it with, you have a measurement of volume, or you use price action to watch price when it tests up here or down here to see whether or not you actually get aggressive responses there, like that. Let's see what they do. I'm curious, not just because I'm long a little yet, but also just, hold on real quick. Okay, so yeah, it's also, so we can look back and if we want to know, like, if this is too tight and we're thinking, oh, I don't want to get rid of my long here. So then again, you'd have to go to the left and say, well, where else do we have signs that bulls were clearly in the market? Well, when they beat this combo here, right? Where did that happen? Right there. So if we mark this guy, we can go from here to here because that's where all the volume was on the up, right? Here's where the low is. So somewhere in there should be support. right? They notice how they test under support and then they reclaim it. That's totally normal. It's not just getting price down here, it's rejecting it, right? If they would have done this, we know it's bearish. But when they can't hold down here, and instead they break above this, now this should be support. So he may be coming down here. I might actually have this in the wrong spot. I'm rethinking this. Just doing that. If they want to pull back here, they could actually pull back into this guy's zone to try to recover this. But we should see them defend it when that happens. So let's leave the stop back down where it belongs until they make this pivot. And if they can pivot this and trap this guy, then I can put my stop actually above break even. Because if the sellers are very trapped like it looks like, the moment they get an opportunity to cover for break even, which should happen right around like here, let's say, this area, like see that high, right? Somewhere around there. We should see them aggressively covering somewhere in there. So if they aggressively cover here, I'm not worried at all about the long. And this is why it's so important not to immediately put your stop at break even just because you don't want to lose a trade, because it would be very natural to have a wick come down here but close above this. Totally normal. Frustrating as hell, but just the way the market works. And then that's what gives it the energy to chase it higher. So the black dot indicates that there's some divergence in this bar, volume divergence. So there's more buyers than sellers in this bar, or more aggressive buyers than aggressive sellers, yet they closed it bearish. So in a bearish environment, that's going to be a sign of aggression. But what's interesting is that you need volume to also be bearish. So if you look on the smaller time frame, I've talked about this before, you can see, you get an early warning on the smaller time frame. Look at all this cumulative volume on the upside, and then comparatively look at the cumulative volume on the downside. The upside is clearly dominant, right? Even if you back up a little bit, like this is the dominant wave here, right? This is the next biggest sell wave. This is clearly the dominant wave. So most of the volume is buy volume, right? All the way up here. So this one little bar having more buy volume than sell volume, it's not all that meaningful in that specific situation, in my opinion, because you're running up against all this big volume. And so what you can do is you can ask, well, where did all that volume come in? And you can draw the volume profile for just this wave. And you'll see that that volume was all the way down here where I bought, right? Similar to what my entry is. That's where the majority of the volume is for this whole move. So what does that mean? It means my volume profile is basically a B profile here, right? Just like we looked at before, where we have a big move up that didn't have a lot of volume, but plenty of volume down here. So what does the market like to do? It likes to come back down, make sure there's still buyers there, and when there are, it bounces. Just like on the daily chart. Just a smaller microcosm of the daily chart. So if you know how to read volume profile on a higher time frame, believe it or not, the same concepts still apply to the smaller ones. It's just that you also have to be aware of where you are on the bigger one because they're more significant. So if you put in a B profile like that on this tiny little time frame, you can't just be bullish if on the higher time frame you're in the middle of single prints, right? Well, they might not hold that one because the single prints are going to get traded through on the higher time frame more often than not. But yeah, if you're like I didn't even do this, but we start here at our profile, and we're gonna move these. I haven't done this yet. So this is yesterday's point of control up here. This is where all the volume was. But interestingly, it looks like they had more, the TPO point of control was down here. So we're gonna adjust this. So this was the TPO point of control. So both at the volume point of control. Oh, did I just hide it on accident? Whoops. And the TP, I went to lock it and I think I hit it. As well as the TPO point of control, we're gonna expect choppier trading there. Where the heck is it? There. We should expect choppier trading in this area. Oh, I guess I can't do that unless I do this. So that's going to be choppy in there. And then in the volume point of control as well, if we return to that area, that's also going to be choppy. But note, we've got an old low volume node from way back here that has repeatedly been single print. It's been tested with just single prints over and over and over again. Right there, what's once. Well, two prints, but just one test, right? So that's 2, and a little bit here, 3. But they're finally starting to fill it in here, right? So what I can do now that they're starting to see, we actually have some volume in there, right? So I can go up to where that volume was, right there, and then I can move this one up here and say that that area now is a likely resistance that could become support if we come back to it. This is just an old close. It's pretty old though, from way back here. It was the highest at the time before Friday, actually including Friday. So I'll leave that one there. This is also a low volume node. I'll leave that alone. Red was some single prints in the middle of the day. See that? That one I marked off right away. And then there's actually another one here. But that's okay. I don't need that one because it's so well, I guess I could do it, but this is really clean. See how it's kind of hard to describe, but like see how nice and normal that looks? Like it's like a 45-degree angle, more or less. That suggests that auction is more or less complete, and that's why we can just sprint right through it when we come back to it. When you see that kind of thing, that's normal. The abnormalities or the anomalies look like this. Like this. This one's actually pretty good, but this is an anomaly. See that? Like it's not normal, right? All the volume looks okay. This big chunk. See that? That's a problem, right? Those are anomalies. This big chunk. Those anomalies tend to act as support or resistance, at least on the first test. So, and then this is volume area high and low. Well, we'll do TPO volume high and low because the problem is that the volume point of control is way outside of the value area, the TPO value area. So, and then interestingly, the low value area low aligned with a prominent point of control from previous days. So that's a pretty important level. We're going to leave that one blue. And then let's see. So anomalies. So we've got this one that more or less lines up pretty good with this. We'll just adjust this slightly down to here. So that'll catch that anomaly in case we get a really big pullback. And then this one isn't necessarily a low volume node anomaly, but we're going to call it more like a single print. Oh, whoops. I copied the wrong one. That's okay. We'll just draw a new one. So this has this like inside single prints. Right there. And then we're going to lock it. No, not load. Lock the other L. There we go. And so, whoops. So now I've got, and then you technically have a low volume node right here. See that? It's really small, but it's so close to the point of control that I'm going to leave it alone. This whole area kind of looks like it needs to get fixed, to be honest. This looks a little bit messy. Yeah. So if we do come back in, we're probably coming back to at least 11,000 if I had to guess. If we are going to pull back that much into last week's range, we could literally go 100. We're not 100 points. Yeah, it is 100 points. So this breakout here is the spike from Friday, right? We spiked up there on Friday towards the close, and they pulled back a little bit. So if you want, you can mark this pullback preceded the spike, right? So that becomes a relatively important spot to hold. More or less, it's to wherever the pullback. So right here. So that whole area, it really needs to hold to stay bullish because they spiked off of it and then they pulled back and they came nowhere near it. See that? And then they ripped, or we gapped. And so now we're into here. I can take off these. We were just, okay. So we're right inside of this low volume node that we pointed out on the profile. We're right inside there, and that's why we're having a little bit of trouble here, and we're not just ripping right through it. It's because on the profile, this area has repeatedly been resistance. See that? Repeatedly been resistance. We have traded above it though, and most likely we're coming back for this level, the 11,330 level. We're probably going there. This 35. That's probably where we're headed, right? And then here, so 11. Do I not have a Buddha range level up there? Why didn't I have that on? 11,279, 11,335.75. I gotta fix these. I didn't adjust these yet. Oh, there it is. So I've got last week's in here still for some reason. 279. Yeah, so these are just from last week. I made the new ones and I didn't delete the old ones. Am I missing one? Nope, they're just that far apart. Cool. All right. Okay, so yeah, there's really nothing to do here for with my trade other than make sure that your stop is underneath, like, somewhere that makes sense. Because I had it a little bit too tight up here. I want it underneath these offsides sellers. That's the important part. Because these offside sellers, they already snuck underneath them and absorbed. And then they tried to defend it. See, it happened here too. When they have a lot of volume, you guys, that's going to happen. If you're trading with a lot of volume, here, I'll show you. This is the same thing on the candle chart. Again, everything's fractal. So look, when you get a lot of volume, like this, big volume, this is the bar to watch for the trap back in, for the move underneath that gets bought. Now this one didn't get underneath it, but it got close. It got into it, right? And then they bought it. But when you see these, like this one, see this big volume bar? If it's bullish, it's normal to test underneath them before going higher, right? Same with this here, right? Even if it's bearish, because it's bearish volume, even if it's bearish, it's normal to test above him before going lower. That's normal, right? And that's why this was so nasty. It's because it did just that. It tested above this, and it tried to go lower, and it just ran into a wall, right? But notice here, these were low volume, right? This was a low volume high. So if you come up here and break above that early on, that's probably going to stick, right? Here, I'll find another one. Big volume down. See that? This high is going to get swept before you go lower. Big volume low, or big volume on the high, right? You'd expect that one to get swept. But it just doesn't get there. It tries, but it doesn't get there. If it would have gotten there, sellers could have showed up back here. The idea is not necessarily that you're going to get behind the high, but you're going to usually retrace them. That's the way to think about it. They've got a lot of volume in them, and so the market wants to immediately come back and make sure that buyers actually control that area. Once they do come back into it, if they can't get behind it, it's good, right? Now, this whole level, this whole range from up here to down here, as soon as this happens, right, this whole area is easy to travel through, believe it or not, because you've already auctioned it really well, tried to break up through it, and then failed. So same exact thing here. Auction, or big volume down, right? They try to break above it and they fail. And where does the next candle close? All the way down here, below the close of this candle, because they've already done all the work here. This pullback is all the market needs to know. As soon as you reject it, That whole area is now sellers. See that? So the big volume is not only relevant when it closes, it's relevant in the future. Super important concept. Hope that makes sense. Same thing here. Here, I'll show it to you again. So big volume up. What's probably going to happen? They want to re-auction it. The market wants to re-auction it. As they come back through, you're re-auctioning. It's healthy. The low does not get broken, or at least it doesn't close below it. Now this whole thing can get retraced with ease. Guess where the pullbacks go to? Look at that. Like picture perfect, you guys. Right to it. Why? Because this is all re-auctioned. It's done. It's finished. It's repaired. Right? This is just, everyone knows at this point that it's bullish. They just don't want to be short anymore. So the moment it comes back to this high, they're just like, get me out of this. Right? And we can see this over and over and over again. And it's not just the candles. This has nothing to do with candles. This is just how the auction works. Right? Easy to re-auction into it. Now this whole big, see, this is like 2 big volume candles in a row. So on a bigger time frame, like a 2 hour, you're going to see, where's that damn thing? You're going to see that whole area here, once it gets re-auctioned, as long as they can't close above it, they almost did, but they didn't, right? Then it should be very easy to retrace this. And then where all the volume is the resistance. See that? I mean, it's just over and over again, like every day. That's all it is. So you can do that on the candles, right? But it actually has nothing to do with candles. It's just the way the auction works. It's like, it'll always work this way because this is just human behavior. We don't want to lose money, and so when they start to lose money, they react. So exactly same thing here. Like I said, the X's. These blue on the top, or like teal, and then red on the bottom, as well as the diamonds outside the candle. So the purple, and then on the ups, and then this purple, and the upside's pink, right? On this tiny, tiny little 24 tick time frame, you're going to see the exact same behavior here. So big seller, right? Oops, where's my volume? Big seller. We have the algo telling us that there's a lot of volume here relative to what's been going on recently. It's going to be easy to retrace him, right? So this move is easy. And if they were going to go lower, this would be the resistance, and you would very quickly and easily get back below it. And when that does not happen, we know it's not bearish. Well, this guy is exactly the same thing, only the inverse. So when this goes up, you know the pullback's probably coming, and if they can hold this low or test below it and immediately reject it, this is support. And that's exactly what happens. So could they come back in here again? Yes, but they should buy it again. If they don't, then something's changed. And that's not just today. We can go anywhere on the chart and see the exact same thing one way or another. So let's find one. Okay, so we've got regular trading hours, right? Here we'll go. I want to make sure we're not at like a data release. So we'll just start right here. I'm pretty sure there wasn't a 10 o'clock. There might have been. It's okay. Okay, looking for big volume. So X's or diamonds outside. Not these diamonds. That's speed. But this. So big volume, aggressive volume to the upside, right? This bar should be easy to retrace. And if this low holds or is rejected, it should go higher. They don't even retrace it. So very bullish there. Okay, it probably will get retraced later. We're going to mark it. Doesn't have to happen right away. This is a very small time frame. Same thing here. It gets retraced. They hold the high. They easily go through it, and this is now resistance, right? Same thing here. Go through it, right? Go down. Do they retrace? Yep. Do they hold? Yep, it's done. This should be resistance now. Where is it headed? Probably back to retrace this. Where does it bounce? Right there. Why? Because it's bullish. And these bulls that we had, the auction returned and repaired this, and we found more buyers waiting in line to get long in the same spot. That's bullish. Right? Like literally anywhere on the chart. Oh shit, what did I do? Literally anywhere on the chart you can do this. And if it's crazy, right? It's nuts. But it's obviously not going to work. It's obviously not going to result in a trade 100% of the time. But it's if you can think about volume and you have a way to measure it relative to the rest of the bars or candles or whatever, you can use that basic concept and you can analyze anywhere pretty much what's happening. The key, though, is to realize that volume and price do not act like brick walls. It's not quite that easy, right? It's not always a perfect touch. It can actually go below it or behind it, I should say, because it can go in either direction. The important part is that you should find responsive traders there. And when you don't, you know something has changed. Without any indicators or anything, if that basic rule doesn't apply, where you repair a high volume area, and there's all of a sudden where it used to be buyers, now there's no more buyers underneath that high volume area, something has changed, right? It may be a little late to save your trade at that point, if you traded that, but that information is going to keep you from repeatedly fighting the trend, because that's how trends start. We could probably find one that doesn't work. And what you'll find is when they don't work, big trades develop. So let's just go back to like some random place and we'll see if we can find one that doesn't work. It'll usually be before a big trend change. So let's go here. So seller, right, with a lot of volume, we should easily retrace that. So you don't want to sell it immediately. You want to sell the retest if you think it's bearish. So let's see if they defend it. If they don't, it's bullish. They try to defend it, right? Looks kind of bearish. They tested above it and they defended it. But look at what you're facing though. Big wave up, right? They immediately reject. This guy here got really trapped. He was aggressive, which is what the star means. He had volume. He tried to follow this guy in and got shafted, right? It's probably done down here because they re-auctioned, they tried to defend it, and they were wrong. So this looks late. This star looks late to buy, right? But most likely, this next move is probably going to be big. Let's see. Do they hold this? I think they will. This is likely, that's that same range. See that? That shaded range. They come back to that shaded range. This is probably as low as you're going to get. If I had to get. Okay, they do it twice. That's probably as low as you're going to get. Oh, okay. Here we go. We found one already. So this looked like the low. Eventually they do stop working, right? You're going to always find something that breaks. Nothing works all the time. You have a big seller here, right? You'd expect him to get retraced. He doesn't. What do? They rip right through this seller. Most likely, this is like something. Either it's news or whatever. It doesn't matter why, right? But the regular rules for volume, where high volume gets retraced and high volume that got retraced and broke out holds, both of those fail right here. There's no buyers. Assuming there's no buyers here, and that we don't get back up here, this should be a really big downtrend now. It should continue lower. Whoops. Yeah, see that? So it prolonged down, not just a rotation like we got when everything works here. See, everything was working how it was supposed to. We got a rotation up and we got a bounce like we're supposed to, and you get a rotation up. That's all I need, right? I'm just looking for 10 to 15 points. So I can take both of these trades and call them wins, and then my runners stop out. So I actually lose nothing. I just maybe don't make anything on this one. Whoops. On this one here. But I make money here and I make money here, and I'm like almost done for the day, right? But when the runners stop out, I can be like, oh, hold on a second. They had a big seller in here, and he didn't get retraced. And these guys should have, if they were stuck, they should be continuing to defend that level, and there's no buyers anywhere. This is probably a short. So when I get an opportunity like that, or a star like that, that would be my sell. Here's that pattern again. Pink bar, orange bar with a purple diamond. When it's bearish, that is hella strong. Notice he doesn't get retraced, right? Bears are in complete control to the point where they're not even repairing that. They're probably coming back there eventually. Yep. See that? They come back to repair it. Now we're watching this high to see if they can sell it again. And we can sell it again if they do. Do they sell it again? They don't. They totally let it rip right by them. Wow. Now does it become support? You'd think it does. Nope. They just rip right down. Wow. What was that? Oh, that's the open. That's the open. So this is why you don't want to get long or short. You don't want to be into a trade right into the open, because this is the kind of, all of a sudden the range just expands like crazy. So where they went up here, oh, pink bar, orange bar, purple diamond. No retracement, bearish. I bet anything this area up here was important on a higher time frame. Let's see. If we go all the way back, it's this. Oh, it's this. Look, this guy I said needed to be retraced but wasn't, got retraced at the open. Here, I'll color it a different color. So these in the green, that was the one, that was that heavy, that's what started it all, right? The big drop. That's what started it all. And it should have gotten retraced because it had high volume, but it didn't. Then all the volume came in at 8:30 with the open. Finally, there was volume. The reason why it didn't get retraced is because it was a low volume environment pre-market. Volume comes into the market. Where does it go? Right back to that zone to get another pink bar, orange bar, diamond. Now this area needs to get retraced. And they get bearish, right? And so did they get back up there eventually? Let's see. I believe they did. What happened when they got back up there? They try to reject. No volume though. No signs of high volume up there. They're probably not done with it. Ah, they rip right through it. Now it's support. Yep. Wow. Cool. And then and then you're done with it. Yeah. Now we're just gone. Never to return. Cool. Okay. Hopefully that makes some sense. Like I said, I was hoping that we'd find one that doesn't work out just how it's supposed to, because it's not about being right all the time, right? That's not the point of trading. Like if anyone tells you they have something that works 100% of the time, like yeah, like that's not a thing. But what does matter is knowing what to do when those concepts break. Know what that means when that stops working, and know whether or not you have a trade, or maybe the rule is you just step aside until it starts working again. That's okay too. Any questions for me? Hopefully this stuff is not too overwhelmingly confusing. I know that visually it's a lot to look at, but the key with this system is just to learn one piece at a time. You start with the easy stuff, right? With just like triangles and stars and colors. And then I just slowly, like back here, I started to notice that like where the dash is, which is the point of control in the bar, where it moves and the direction it's moving has a lot to do with the direction of the market. So I added a yellow line to connect them all. And then all of a sudden I started seeing patterns in that yellow line around support and resistance, and I'm just like, oh wow, wait, there's trades here I'm not even aware of. And it makes sense because it's the same thing on a higher time frame. It's just really zoomed in. But an easy way to think about it is if you imagine that each one of these bars are daily charts or daily candles, right? You have a big red candle, you get continuation, Then you have a big heavy up candle that tested below that red candle, closed back inside, follow through. They try to push another down day here, but they can't even test this lower low. And then they break out with high volume, followed by sellers giving up, and you have like a squeeze day. Are you going to short that? I wouldn't. Right? What I would love to do is be a buyer when they come back to test the area where you had the volume shift, right? Where you went from from down volume to up volume. This high volume area probably gets retested, right? If it doesn't, it's really bullish. But most likely by the time London opens, this guy, it would be more healthy to have him be retraced. So I could get stung here, putting my stop underneath him, right? It might not hold at the low. Really, it probably belongs under this one, to be completely honest. But I'd be willing to get back into the trade again if they do that. If they come down and they hit me and then they jump right back in again and they retake this area, I'll just take the trade again because I've already taken some off. And I'm trading with micros anyway, so I couldn't really care less. But the right thing to do, in my opinion, is to keep risk low and just be willing to take the trade again if it's still valid. The question is it still valid? And you wouldn't know that until after it traded down here and to see if they can retake this. Because they could just drop it, right? That's always a possibility. That's why your stop is there. That possibility is why you use risk management. Because sometimes it's just totally bearish and they just didn't have any volume to push it through. And those times you'll be wrong and you'll lose an R. But as long as you know what that means so that you know not to just buy it again when it drops and instead to wait to buy it until it retakes that level, you're good, right? And then if you're looking for the short and you're like, well, pink bar, orange bar with the diamond, it's getting continuation, right? So maybe if it breaks down here and then it finds resistance there and breaks down, maybe I should sell it. I'd say, yeah, go for it. That makes sense, right? You've got change in character and you freed these trap traders down here that were short and that were off sides. And if they can get back on sides again, rips are going to get sold. And now that might not happen in London. That could happen at the US Open too, right? New York could open. We ripped down through Friday's close into that PM spike. If they come back up into overnight range and reject, if there's decent volume there, yeah, you're probably looking at a reversal, right? But I'm not going to guess that this. When I see evidence that this is support, I'm not going to guess that this is resistance until sellers actually take a support. That's really what it comes down to. It might be simplified a little bit, but as long as the sellers failed to hold here with what's basically the same pattern, I'm going to assume that they're going to keep losing, right? Until they don't. Now, once I'm going to be wrong, but in the meantime, the hope is that you got 30 points there, and you got 30 points there, and you got 30 points again, and then you're wrong, and so you give back 15, right? That's best case scenario. As long as you have your rules intact, you just get with the side that's winning, and you keep taking those trades until you're wrong. That's the only way I know how to trade momentum. Other than that, it's just pick a support, pick a resistance, wait till you trade under that resistance and reject it, and then go in the opposite direction. That's all there is really to that. And it's just a matter of finding support and resistance and what you decide that is, right? And that's mean reversion trading. But an example of that would be if I thought it was bearish here, and I saw this high, and then I saw us test above that high, getting back below that high would get me short. But you don't want to do that if it's trending up. You only want to do that if it's balanced or it's bearish. But it does work when it is. Like here it's bearish. Let's see if we got one. We didn't. It's bullish here. Here's one. So it's bullish, right? Identify trend as going up. You put in a low, you get under that low, they retake that range, it's probably going higher. Right? And you get lucky there and you catch a big breakout and your 15-point trade turns into a 50-point trade or more. Right? That happens. The key is that's never going to happen. Well, very rarely it's not going to happen if you just fight the trend over and over again and try to guess when it's going to reverse. Then your chances of getting that 50-point trade are tiny in that scenario. Whereas if you're just waiting for that pullback in the trend, your chances of getting those really big trades are actually better than you think. Because it feels like you're chasing, but you're not actually, as long as you're trading in the right location. Like, in other words, you may not be buying down here, right? But if all you need is 15 to 50 points, you can be a buyer here and do great, right? I mean, that's 11,000 that's more than 150 points ago here. But I guarantee you a lot of people would have looked at this and been like, that's a chase. We're right at resistance. I don't want to be a buyer. And completely ignoring the bigger picture, saying like, wow, wait a minute. We tested below this low and we totally rejected it. And then we tried to retrace back into that range and they rejected that too. Right? It's not bearish. I don't care that it's resistance. As long as you're getting the best price available, which is like a pullback to some area that was important before, then yeah, and they reject lower and they go higher, yeah, go ahead and buy it, right? I'm not a huge fan of waiting until you get to here to buy, right? That's maybe don't buy it now. But if it's going to pull back and then it fills this gap, for instance, and then bounces, it's not too late to buy it, you guys. It can go up another 100 points. Without that much trouble, it could go up 200 points, I'm telling you. It just doesn't matter anymore as long as you're continuing to trap shorts. It doesn't matter in some ways how long the trend's been going. Whether or not it's been 1 day or 2 days or an hour. What's way more important is that it has energy. And you get that energy from those pullbacks that get rejected, right? When you pull back and it looks like the trend might be reversing, and then rather than the trend reversing, instead they reject lower and bounce. That's what it can actually push further than the first move. Like, I'm not an Elliott Wave fan, but like the one thing that Elliott Wave people get that a lot of other non-Elliott Wave people don't get, like I said, it's not my cup of tea really. I don't see really anything beyond this. I don't really use it for. But the idea that wave 1 or whatever, I don't remember if it's 1 or A or whatever, it doesn't really matter, but that first impulse wave, right, followed by the pullback, the next wave after that can be significantly bigger than that first impulse wave. This second one, the continuation of the trend, can be like exponentially bigger than the initial impulse wave. That's what they have right. Other than that, I don't really have anything good to say about Elliott Wave and the proponents of that system. But for instance, if you said that this could be an impulse move, which looking at volume makes sense that would be the impulse move, right? A pullback that gets supported could create an exponential move higher. So just because you didn't get it in on the impulse move does not mean it's too late to join the trend. And that is, I can't tell you how much money you can make if you just accept that. The hard part for most people is they want some kind of confirmation. So they buy when you break a high and then they get crushed and then it goes without them. Right? That's when most people mess up. Is they're afraid to chase, and so they end up they're afraid to be wrong, I mean, so they end up truly chasing because they're waiting for some sort of confirmation that it's really bullish now because it's broken above this key resistance, right? That might be true, but that's not the time to buy it, right? If you must wait for the confirmation, that's fine, but don't buy at the confirmation point. Buy later when they bounce after a pullback, because that's what markets do, is they retrace after they go to resistance or they bounce after they go to support. That's just what happens, right? They're going to go back and repair all of that. However they got there was probably not super clean. So it never goes in a straight line. It's gonna go up and then it's gonna pull back, right? Like if you wanted to wait, let's say you wanted to wait for this high to break to get long, right? You don't buy this and put your stop here. That doesn't make sense, right? What does make sense is saying, okay, I want to wait to see that high get bought. And now that it got bought, I know I'm bullish. So now pullbacks that get rejected can get bought, but I have to put my stop down here under that rejection point, and you're good, right? Or you could do it here. Got sign of aggression, put stop underneath the sign of aggression, you're good, as long as it's a trend, right? Just like the one I took was like basically here, and the stop was down there, right? That's just how it has to be. Even though you could say that maybe you wanted to wait for this to break, right? You don't buy that with a stop here. That does not make sense. You're going to get crushed every time, right? Instead, identify it's bullish there, expect a pullback. If they bounce it, buy, but put a stop underneath it. So this one you might have to try twice. If you took that one, then you'd take this one, put a stop down here, and you might have lost 15 points, but you'd make 50, right? If you had a really simple strategy like that of wait for a high to get broken, then wait for a pullback to get a bounce. Like this isn't much of a pullback, but even if you made that mistake, as long as you kept going with the idea, you'd do okay. As long as you occasionally got it right. Like what we're doing is a little more complex than that, but all I'm saying is that that's the right idea. And it's not that far from what most people do. The problem that most people have is they either buy this and they put their stop all the way down here where it belongs, and then when they lose like a huge portion of their account or a huge portion of whatever they would win. Like they lose like more than 1-to-1, right? And then they make 15 points from their buy, and they're like, "Whoa, I'm up $200. I don't really want to hold any longer, so I'm going to sell." And then it goes 100. And so when they're wrong, they lose 50, but when they're right, they only make 15. Like you can lose a lot of money trading like that too. That's a little bit more complex way to lose money, but a lot of people do it. Because it's scary having risk on, you know. You need a way to manage it. It's scary. It's hard. If it was easy, to make money like and put money at risk, everybody would do it, right? And everyone would make money, and that's not a thing. Like markets don't work like that. Everyone can't make money. The fact that it's a little tricky is the opportunity for everybody who knows how to trade. That is where the opportunity is. Like, let them make that mistake, right? Let the chaser buy this and then let him freak out and sell this. Let him, right? That's okay. And then when he comes back down to my entry, I'll just add to my trade, right? I'll take advantage of that mistake rather than making it. I'll just build into my trading program how to get paid when people make that error. When people try to short this and they get the market to pull back a little bit, I'll just make sure I get paid when that happens, right? That's the way you want to think about it. Rather than getting too like esoteric about like having to think to the market, you need to know what the market's going to do next. You don't. Just know where people make mistakes, which could be your old mistakes. I mean, a lot of my ideas come from just undoing what I used to do. Like, where did I used to fuck up? And now, how do I make money there consistently rather than lose money there consistently, right? So, like, my old self, like 2017, 2018 self, like, whoever's still trading like that is now paying me money by making those mistakes. And so, if you want to think about it that way, that might be helpful. Think about how the ways that you lose money the most, and then build a trade setup that pays you every time someone does that. right? And then that way, first of all, you'll never make that mistake again as long as you follow your trade plan, because your trade plan is literally built to do the exact opposite of that, right? And then second of all, if that's a trading mistake that's natural for people to make, chances are you're not the only one making it, and chances are there's an edge there. It's just a matter of figuring out what the hell you're doing wrong and what the inverse of that is, because it's not always just buying at the moment that you usually sell, right? It's like, for instance, if I was a chaser, which like I said, I was less of a chaser in the past and more of a trend fighter. Like I was like a contrarian. So like I was the one selling here and being like, yes, I got the high. I'm holding for 50 points, and then I'd get stopped out. But if my mistake was I missed out on this whole move, I just want to break over a high and then I'll buy, and I buy this, but I'm too afraid to put my stop down here. So instead I put my stop here because I don't want to risk more than like $200 or something like that. Then the way to beat that or to make money when someone does that, it's not necessarily to buy while it drops, right? But it's clearly not to buy this. And while you could sell, the inverse of that would be selling this and buying this. You could try that, but in a trend, that's probably not going to work very often. So instead, in my opinion, what you would do is you would look for that confirmation here. And then when you got this pullback where normally you were getting stopped out, that's where you start looking for signs of aggression to the upside. And on, no matter what time frame you're on, like here's a smaller tick chart, so it's like a smaller time frame. Perhaps you'd look for the bullish volume shift to happen on that pullback. So like getting above this guy, right, would get you long. What, cat? You don't need anything. You're fine. Yeah, so getting back above this aggressive seller on this smaller time frame might be your entry. And while what's funny is that the entry is actually in the same spot as your chase, you just wait for that pullback to happen first that normally stops you out and get it on the way back up, right? So your entry is the same. You don't actually have to change anything about that. You just have to be a little more patient about that entry, and rather than buying right when it breaks that high, instead wait for them to hold whatever you decide is support here, and then buy as it rejects back up. That's going to be a strategy that every single time you run that, anybody who bought this and sold, you're now taking advantage of that by getting true confirmation that this area has buyers, right? Because you're only getting long when that market bounces. And so you're missing all the times when you normally get stopped out from chasing. And you're also missing all the times where it just reverses. And instead, you're only getting long when it bounces. Now, is that going to happen as often as your chase entry? No, right? So you might not make an inverse amount than you were normally losing, but is it going to work way more often with a higher win rate and with a better RR than the other trade? Hell yes, right? So it won't take very long of just doing that over and over again to make back all the money that you might have lost chasing. So that would be my recommendation, is figure out where you lose the most money, what mistake you're making, whether or not it's chasing or fighting the trend or whatever, and then trying to build a trade setup or a trade strategy that's in essence built to protect yourself from ever making that mistake, and instead either making money when it happens, or if you got most everything right when it comes to direction but you just are timing it wrong, just patiently waiting for that stop to happen and then looking for your entry signal, right? You just might be getting if you're being the first mouse to the trap, you're gonna get hit by the trap every time. Whereas the second mouse is going to get the cheese every time you get trapped. So instead of getting trapped, wait for someone else to get trapped and then take the cheese. To simplify it as best I can. Or like I said before with the football analogy, if you're a running back, you don't just run right at the defense. You wait for a blocker to get in front of you and then you follow that blocker in. That's a much better way to trade too. Don't be the first one to like test an area because you think you know the direction. You're much better off making sure that you've got someone there to help you. And that someone there to help you is usually people on the other side of the trade who are forced to make decisions because they're losing money. Those are by far the very best blockers there are. Trap shorts when you're long or trap longs when you're getting short are by far the best people to follow into trades because they are forced to make that trade, and therefore that directional move is going to happen a lot more quickly. Any questions, you guys? I just like there's not a whole lot to do other than just wait for the open at this point because this is the this is the DAX open right now, so we're probably going to see some volume come in here. Let's see if they can come back to my entry. I might even get a chance to add back the micro I got rid of earlier. Let's see. But if you have questions, feel free to put them in the chat, or if you want to see something else, we can go back to a different day. I don't really care how this trade goes. It's more testing than anything because I'm just trying to better understand these volume aggressors, the bars with the X's. And then I've been playing with what time frame to base it off of because it's interesting to build the signal. You need to tell Sierra Chart like what to compare it to, like what a normal. Because remember, the idea here is I'm looking for something with abnormal volume, like abnormally more volume than usual, and also happening at a location that volume has been going off before is basically the idea. That's the basics of it. But to do that, you need to define what Sierra Chart should be looking for normal volume, and then you also need to define what well, it doesn't have to be a time, but what to base off of. Like you have to give it like a zone, right? Like either it can be a price zone, or it can be a time zone, or it can be whatever. Just to give an example of normal, and then you want to base the decision on whether or not to put the indicator there based on times when that normal is when it's not normal, right? So I'm experimenting on different time frames with slightly different settings, more or less, to try to find the optimal setting for my setups. And for instance, like on this really big time frame, I had to adjust it because they were going off constantly, which makes sense because it's a higher time frame. So it takes not a time frame, but the Renko bars are bigger, so it takes longer to move from one side of to print a bar from one to the next. If you look like these really big bars, like look at this big bar here. This bar here goes from 940, let's say, to like 970. So that bar right here is 30 points wide, and if you see, this one is at 937, this one's at 943. So this took almost 10 minutes to form, but in other places like overnight, 30 points is going to take a lot longer to print, right? Like here, this one took like 1 minute to print because it was so quick, and then this one took 10 minutes to print because that has nothing to do with time. It's just distance. So if you're going to base it off of time, your time needs to make sense. Basically, otherwise you need to use distance or something else to tell the system what normal is. Yeah, if you're going to use Renko, then basing it off of time, you gotta really think about that, because if you do base it off of time, what it means is that it's going to work really well the way you want it to during like regular trading hours, and then after hours when everything slows down, you're not going to get the signals that you expect, right? And so what ends up happening here is we get a lot of these back and forth, right, where it shows big volume down, but then immediately big volume up. Now, that is sometimes a reversal, but usually that's actually trend continuation. And what it is it's a seller trying really hard to defend a level, and then a retracement and an immediate rejection, right? So usually you just want to go with the trend when you see, the way to think about it is if it's bullish and you see a red X get taken back after going down, right? And they get taken, you get above it, that this is technically your confirmation. And that this X here would need to, you'd need to trade under it to have any chance of going lower, basically. So you could say that this is now support, right? And it's not quite as obvious here because it's like we don't know what happens, right? But if you look back a bit, like here's an X here, right? So it's, and then here's one here. And so what it's saying is this is potentially resistance. And then when it comes back up and tries to retrace it and finds sellers there, it's like, okay, confirmed resistance, right? Then you get another one. So now confirmed resistance has moved down. Then you get another one here. So confirmed resistance, they tried to defend that level. It's actually the same spot. If you look at the white line, it's just under the white line, right? That's exactly where this here. I'll just shade it. So that's resistance. When price came back to resistance, oops, they tried to defend it. When they fail and buyers aggressively buy it back, guess where price is going to go? It's going to go here. Why? Because that's where resistance was before that everyone agreed on. And then once you get there, well, we would expect them to try to defend. When that defense fails, price is going to go higher, right? So it should still work on the other time frames because volume is volume on any time frame. The trouble is you're going to get too many signals if you use all the same settings on a higher time frame. So I had to adjust it so I wasn't getting quite so many signals. But this seems to be working pretty well the way I want it to. Like I said, I'm not necessarily using them just as entry signals, but they do work as entry signals as long as you have the direction right. Like once it's bearish, they're not all going to work, but once it's bearish, you're gonna either be able to enter on the bar or else in the range of the bar when it gets retraced. So like here, so it's bullish here, let's say, right? Well, here I'll show you bearish first because here's bearish, right? Here's bearish. I was trying to find a spot that these won't be in the way, but whatever. So once you know it's bearish, see when it's not bearish, those red X's get beat, right? And then it's bullish. But when it is bearish, you know because this blue X gets beat, right? With aggression. That's your first sell. The blue X is getting beat by aggression. Now the red X's are going to work better than the blue X's. See that? Blue X gets beat immediately. After a retrace, you get a red X. It's bearish. That's going to be a better sell than this is a buy. You could technically scalp this back up, but it's not going to work very often unless it's at resistance. I mean, at support. This happens to be at support. You then get another one here. It's very normal for them to be retraced. The sign of aggression is usually a better entry. This one gets beat. Now it's bullish. Now you get another one. It gets retraced. Sign of aggression, it's bearish. Right? Here's another one, bearish. Does not get retraced. Very bearish. Gets retraced later, probably when volume came in at the London Open. Rejection. And they beat it with aggression. Bullish. They put another one in here. Looks kind of bearish. No retracement right away. There's your sign of aggression. It's a little bit late. They try to defend it. It looks like they're going to fail, doesn't it? And they do. Right? So it would be hard to actually trade this level because every one of these bars is 30 points. And that's a lot to risk. But you could still avoid fighting those basic concepts. You could say, I don't want to be buying if I've got a red X, a bar with a red X above me, and I'm trading into it. I don't want to be a buyer. And then the opposite would also be true. If I'm going up, I don't want to be a seller when I see this, because now I know I only want to be a seller down here. Or if I get really far away from this and I get another red X, maybe I could try it, but I really want to see them succeed in selling first, rather than just immediately selling when you see the red X. Wait for the retracement and see if they actually aggressively defend that area, because that suggests they're not just trying to fight, they're actually winning, you know? You want, and when it gets balanced, they'll both work. But you won't see that here because you don't see NQ balance in like a 150 point range. It usually balances in more of like a 60 point range. So on the smaller time frame in balance, you'll see them both work, as long as I got the settings correct. So let's find a balance period. And you also shouldn't get very many of them because there's not a lot of volume during balance. So you shouldn't see a ton of them when it's balanced. So this looks kind of like bearish to balance, right? So bear, triangle down, sell, as long as you know it's bearish. If you don't know it's bearish, wait for the retrace, and as long as the retrace doesn't go back up through that X, the next sign of aggression should be good. Retrace, X, right? They try to beat it, sign of aggression down, sell, right? Like price can get behind it, but they have to immediately reject it. So that's your sell. Now, this is support, right? If they buy it and then you get a blue X, no X there, red X, come back up, retrace with this, blue X, there we go. So if this is balance, this will lead to a lift, but we might need a retracement and a sign of aggression first. Nope, we just get an immediate lift. Red X, that's probably a sell. Here's your sign of aggression to confirm. See, we didn't get the aggression on the way up. They just immediately gave us a red X. Just like here, they got a red X. It went down. They tried to get a sign of aggression, and instead we got blue X. So that's what you start to see in balance. Is they both technically work for 15 points, right? Because that's what NQ does. It goes 15 to 30 points down, then maybe 15 to 30 points up, 15 to 30 points down, and then maybe 60 points down. So now you're not going to see any blue X's for a while, as long as it goes down. We didn't get one here. It's obviously not going to catch every one. But now that we're making higher highs and higher lows, now we really don't want red X's. Ooh, nice. Big drop there. No, there's one. So big drop down told us bearish, right? This is coming in a bearish trend now. See that? And if you're not sure, look back to where the last X was. The last X was above us, if I remember correctly. Way up here. Have we taken that back? No. So it's probably still bearish. Once you get behind him, you know it's bearish. Unless we get above him now. So this is your bearish below, bullish above pivot. There's a sign of aggression to go shorter, to go lower. And we do. Right? And we still have not gotten a blue X, so we're considering to continue, and we haven't gotten above the red X, so we're continuing to be bearish. Another red X, and it's like a secondary one in a trend, you can probably just sell it. Right? Or sell the triangle if it comes after it. Goes up. Blue X. Okay, if it's balanced, it's going to bounce. It's not bullish unless we take this, right? We try to take it, they reject it. Let's see if this guy holds. If it does, it's bullish. It does. It breaks up, it's bullish. Pullbacks can get bought. Like, you could think you missed the move, right? No worries. You've got support down here. These two X's are going to act as support, most likely. If it's bullish, you could just wait for them to actually defend it with a sign of aggression. Or don't, and then you don't lose anything. So they didn't even try. All the aggressions to the downside. All the stars are down. And there's no yellow to the up. There's no blue to the upside other than a divergent bar, but that's not good enough to actually buy. You just star with that. So they just let it go. And just no X's for a while, probably balanced. Now, I bet during this balance period, we could go to the smaller time frame. Oh, we didn't. I gotta go further forward. If you go to the smaller time frame, you should get more signals. And in the balance period, you'll get here. We're too far. I don't have more than 200 bars loaded, so it goes faster, and we're way too far back here. Chart end. Let me find a balance period, and I'll show you. So like, not bullish, not bearish. Like this, right? Kind of sideways. What we're going to see is we'll see more X's in both directions, and they're probably going to work more often. So here's a red X on the smaller time frame. right? Oops. So if you weren't sure that it was bearish, I mean, it looks pretty bearish. So I'd probably just take it or take the triangle after it. But if you weren't sure, you could mark that area and see if you get a sign of aggression there. So you got a little something, then they break it. Once they break it, you know it's bullish. And then this area can be bought as a pullback. Right there. Blue X, that's perfect. Right at the pullback. See how they line up? That is perfect. Look at that. That's cool. Oh, and there's a blue X here too. Look at that. They actually they show up on both times. That's neat. That I haven't noticed before. That's cool. Did the red one show up on both too? No. So, okay. Here it's a volume shift. Here you got the X. So there was enough. Okay, that's cool. But then when they both show up, that one ends up going nuts. Huh. Red X on the higher time frame. No X on the smaller time frame. That's surprising. Red X here. No X here. Look at that. There's the red X on the smaller time frame. And that one works too, but just only for a small moment. And then here's the sign of aggression. And that should be bearish. As long as they don't break this. Oh, blue X. All of a sudden, blue X here lined up with this red X. See that? So if we break this, it's going to be explosive. Right there. Ooh, red X needs to be immediately broken. Yeah. See, they were ready to squeeze this, but on this tiny little time frame, they got a red X, right? And so they needed to get above this with volume, and they tried, but then the sellers came in. I think this goes lower. Oh, I'm wrong. It squeezes. Okay, it squeezes. So this must be enough. They just got above it a little bit. Oh, of course. They couldn't sell it below. That's why. So this is tricky. So this guy is support. I forgot. We had another X. So this blue X is support. As long as he doesn't get taken, it's not bearish, right? So this one is trying to defend. They get above him. I was making the same mistake. I'm thinking it's got to be bearish just because I see the X, but they actually beat him. So now what I really want is to buy it down here on the pullback, and they don't even make it to it, right? They just do what they normally do with the X's is retrace. And then once we get over this, you know for sure it's done. There's the sign of aggression, beating the X, and it's over. Okay. That's tricky. It's a little tricky on the small time frame, I have to be honest. Because there's so much movement. But it's the same. It's the same exact thing. Like this would be where you need to see the shift if you want it to break down. And you know for sure that it's not breaking down once you get above it. It just might not be right away. But there's no blue X anywhere around here, so most likely they just keep going. There's nowhere to pull back to. So here's a blue X. That's probably support. Pull back into it, bounce. Oh, they shifted up. Interesting. So we got another blue X up here. Do they still come back and test this? Yeah. So that looks bearish. There's the rejection with aggression. Rejection. Ha! And then they come right back into it. Oh, that's so dirty. Dude, bears are trapped. Bearish. Break. Bearish. There's no blue X's to get beaten. Except for way back here. This is the last blue X. That's what they need to get under to confirm that it's bearish. And they're trying from up here. Immediately gets beat. Comes back to this one. Finds buyers. Now the blue X is here. That's probably a buy. If nothing else, just find buyers down here and you're good. So it looks like it's going to get under. Now they have to recover this guy and break this one, or put in another red X that breaks it. Red X, so it looks bearish. Get above him and it's over. Red X, get above him right there. Red X, get above him. Bullish. Boom. Yeah, that's the key. Okay, that's the key. But you can see, you can get red X, blue X that doesn't necessarily get above the red X, and it can do it again. But now that we had red X, got above it, it should be over now. We should be going higher. We should be going higher now. I can likely move this stop now, to be honest. It's probably not going to get under this 50. Should be able to move my stop to 50. Pretty sure. Because this guy, they already went lower than him and they recovered it. Broke over his high. Right? So the only way it can really break down now is if we put another X that's red or a blue X that gets broken. That's basically what they need to do to reject it. That's on a tiny little time frame, right? So that broken may just bring it back to here only to see them buy it again, right? But on this tiny, tiny, tiny little time frame, there really is very little chance of them breaking down here because these guys are getting trapped. This one and this one have heavy, heavy volume and heavy aggression, and we are trapping them with this aggressive buyer. So if they do take this blue X and get under it again, it's probably done for the time being. So I can move my stop up there pretty comfortably and know that this should be bullish. This should continue. We'll see. This should continue. Like I said, it's a relatively new idea, but it appears to work now that I have the settings right. Now, I have not tried it on ES yet. I don't know if it works on ES. I still have to play with ES because ES is it acts different. But it might. The concept should still work. I just don't know about the settings, right? That's the hard part. All right, let's see what happens here, and then I should probably get some rest because I got to go back to work tomorrow morning. So, but I wanted to explain this best I could, and yeah, also just kind of see what happens here. It's interesting on the smaller time frame how it looked relatively bearish for a moment, and then they tried to save it multiple times and failed, right? And the one that did finally take it back only happened after they put in these aggressive signals at the low. And so this one is the one that ends up lifting it, right? And then they put a aggressive buyer above this one. And that should do it, you would think. Because that suggests that all of these guys are trapped. Now, they might try, right? But this should be support, is what I'm trying to say. This blue one and this red one, there should be buyers waiting there. Because there were sellers there before, and those sellers got trapped. And usually where sellers are trapped are now buyers. That's the basis of it. And the fact that they had so much volume here means they really fought over this area. You could just, really, you don't have to understand anything more than that. Wherever the volume is here, which is the dashed line right here, that's where they fought over, right? Sellers looked like they had won for a moment, and buyers immediately rejected lower. So now it would be very surprising to me if we got under this. And if we do get under it, we should find buyers relatively quickly. That's the idea. The tough part is in half an hour, we're going to have an open. And all of a sudden, there's going to be all these new participants. And it's not unusual for new participants to try to take advantage of this kind of thing. Right? So you have to be cognizant of the fact that the signals are only based on price action. And obviously, the algo doesn't know that a whole new batch of buyers and sellers are coming into the market in half an hour. Right? That's not something that's way too complex to calculate into something like an execution program like this. This is just looking at the past and telling me what is happening right now versus the past. It's not thinking about, we're approaching this time or that there's a Fed speaker coming up or anything like that. You're only going to know about that and how that affects it after it happens. So the easy way to avoid dealing with it is that kind of stuff is just to be out of your trade before the new participants come in. So in other words, just be far enough along in the trade that you're all the way down to runners or just be out completely and wait for that open and then give it 20, 30 minutes to the point, or at least until like you've already, the direction is clear, right? But when those new participants come in, you should expect some monkey business. They're going to try to take advantage of what other they're going to try to take the high and or the low as best they can, and that has nothing to do with the direction that it's going, right? Like just I mean it's the exact same thing at the open. Like remember how we talked about this if you were here before, that on the open the cash open here, they tried to take this overnight low and they couldn't, and that's all the market needed to see to reverse, right? But that's because there was so much volume in that open that all they needed to do was trap those traders, those sellers, and it was over for the rest of the day, right? Had it not been for their attempt to take this low, this big move wouldn't happen. So realize that like every time you get a big open, it's very normal to have expanding range, and it's also very normal to test beyond a previous high or beyond a previous low and then reject. That's totally normal. And you don't know what it means when it comes to direction until the rejection happens. The only thing you can do other than that is identify locations like this where you see from price action, either from here or you can see it on the footprint too. So I see this area. That's the area with all the buyers and sellers fighting over everything. So see how it's like really heavy in here? Right? But before that, there wasn't anybody there. See that? There's like nobody here. Right? Like look. This is like nothing. A little bit of something. And then all of a sudden, ton of volume down here. See how the volume used to be up here and went lower? That's why it's a red X. And then here, the volume went up, slightly. And so it's a blue X. Right? That's why you got them back to back like that. But the important thing to note is that Sierra Chart's telling me, it's programmed to tell me that this was an area that nobody cared about before. And now suddenly they do care about it. Right? And that's all I need to know. I don't need to know why. I just want to know that in this, it was the smaller time frame, right? Yeah. That in this area here where you have all this one, X, and then X, and then X going the other way, that little area there, no one cared about it before on the way up or on the pullback or this, there was no real volume there. Then all of a sudden there's all this volume all in the same spot. Well, that's where they have to hold if they're going to bounce it. And if they don't hold it, I don't want to be long. Right? Now they could come down and then swing it back up. That's true, right? They absolutely could. And then if that's the case, I'll get stopped out and it'll go without me, and that's okay. But a lot of the times, if the trend's going to continue, they're going to hold this pullback right around here. So we'll see. They might stop me out. It's not a brick wall. It's just volume, right? So it can go lower than the actual volume. But we just expect buyers to aggressively defend as soon as it does. So see how that went down there? We should see aggressive defense here. Buyers should show up and probably put a star on the bar when it closes bullish, if I had to guess. That's what we should see. And if that's the case, and it was a place where you wanted to be long, you could technically buy there. Because that would suggest that the trend is intact. The only problem is you're approaching the London Open, and that's not a time you really want to trade. Not before it. I mean, you want to see it first. Because what they could do is they could come down, sweep one of these lows, and then go higher just because they have new participants and they've got more volume and they can do it, right? So they might do that. And if that's the case, no big deal. The trade is basically a scratch and no harm, no foul. Lesson learned. And then we'll just have to see what it does from there. And if I was too aggressive with the stop, then that's something I'll have to adjust. But my guess is we get a bullish close here with a star that looks just like this, and then an extension up, because we're going back to that important area after they all got beat by an aggressive buyer. All those sellers should be very uncomfortable at this point. If they're not and they defend their level, I don't want to be long. Like I said, just realize that that's as deep as you need to know to understand the concept of pretty much every trade I take. Is if they don't save this, I don't want to be long. Because it's an area that before had a lot of interest. And so if they don't save it, it's not bullish anymore. Or at least for the time being. But I am using a very small time frame to make that decision. So realize it could go lower and then come back to this area and retrace, and then the trade could be valid again. That's, I think, the part that people get confused about. But it's the only way, in my opinion, to limit risk is to use these smaller time frames to step out of the way when things aren't working for you. Looks like they're going to stop me. And then, but it's a trailed stop. It's actually above break even slightly. But not much though. It's basically a scratch. So yeah, it's to get out of the market when things potentially aren't working and accept that you might miss the trade. But also to miss every time where it just tanks and reverses. That's better than just holding and for dear life with leverage. Now it's different if you're not using futures. Then you can just put it underneath like yesterday's low and know that you don't have to risk a ton. But if I put my stop below yesterday's low, I'd be risking thousands and thousands of dollars on the trade that I only expect to make 500, right? And that just doesn't make sense. So see how even the fact that it's like slowed down as it goes down is not a good sign. It's a sign I'm probably gonna get stopped. Here we go.
Stop filled.
There we go. Okay.
Stop filled.
Let's see what they do. Now that they came down there. My guess is now, since they didn't defend that zone, they're probably gonna reject and go lower. But let's see. I might have been a little bit tight on it because I did slide it up a bit, but I'm pretty sure that was pretty... I'm not going to sell it, right? But it will be interesting to see if we get a short signal. I mean, I guess we technically had one, but it wasn't something I was willing to take, which was here. And then the yellow is the sign of aggression. So they're aggressively pushing on this level. But I don't necessarily see this as bearish. So I wouldn't usually short this, even if it is the high. I would wait until they break down under these and then short a retrace is how I would usually do it. But we might just be going to a lower support like this. And if that's the case, then I would have lost $200. So I'd rather be out with a scratch, But we'll see. If they just suddenly lift it here, I'll learn that I can't trust the smaller time frame to put my stop there. But I'm pretty sure when I'm trend following like this, that should work relatively often. But it may need to go under this though. But like I said, I feel like if they can get under where all the volume was, they're probably going to sweep this stop. The low is what my guess would be. So why not save a little money and get out as soon as they reject that low. That as soon as they reject that volume level. High volume level. But was it not for this new signal, the X's, I wouldn't even know. I would still probably have to have my stop down here where it started. Right? Risking $200 or whatever. If I had to guess. Now that might work out better, but the only way to find out is to actually test it. So we'll see. But yeah, the pink bar, orange bar with the diamond is usually bearish. Or when you get continuation of that, this causing continuation is usually a sign that you're headed lower. But you do see it like here in consolidation, right? Usually in straight up trends, they get immediately beat, right? When they start to work, you're at least consolidating, and then if you can get a bigger retracement, you might be bearish. So you're kind of tempting fate. The more down bars they print underneath this pattern, the riskier it is that it actually might be reversing. But I was willing to give back some profits to see if we could hold some of this heavy volume area, and we didn't. So we'll see if that was a good move. And then I'm headed to bed. But I'm expecting this low to get hit. And then from there, they need to defend this grayed out area. Otherwise, this low will probably get hit. And remember, all of these guys were all heavy volume traders in here. Right? And so if they can reclaim that, it could actually drop all the way down to VPOC 111, 111. This is probably where they're headed. And I mentioned on the profile too that I thought this kind of looks like it needs to get retraced. I wasn't sure if that was going to happen in London or in RTH, but it looks like it's happening in London. There they go. They did break it. Cool. Good. Like I said, I don't have to be in every move, right? I don't have to be short every time it drops and long every time it gets long, or goes up. But I definitely like having a way to get out of a trade without losing money when it would have stopped me out anyway, because it does look like it's actually gaining momentum here. So now you can see that we've got some aggressive selling. See this big sell wave, and then little buy wave, and then a big sell wave starting. So this is, if it's a bear trend that's starting, we're going to get sellers showing up aggressively defending these rips. And that's usually where I would be a seller. But with this new system, these guys need to get beat first. Otherwise, I know that they like to get defended, right? So, and especially when there's red ones behind it, because they got offsides. So I would prefer seeing this get tested and then reject out of that gray area rather than just breaking down and selling it on the way down. I would rather let it go, and then as it comes back up, if it rejects again up there, I'll get it that time. That's how I would do it. But technically, this yellow box, if you were bearish here for some, just because like the location was resistance, right? So if you wanted to be aggressive, this was really the best spot to do it, because you saw this 2-bar combo work for 15 points plus, and then they rejected with a yellow box. That's a sign of aggression. So I'm looking here to see if they aggressively push past these X's. So if we get a star, a yellow star down here, especially after an up bar, that would be another opportunity to sell. But I'm not going to do it 20 minutes before London. That's a little dangerous. We'll see though, they might do it. So if you think about it, most people put their stops underneath these visual lows. So that's probably where they're going, is to collect that liquidity. So see that's probably where I would have put my stop had I not looked at the smaller time frame, and I would have probably lost $150. So I'm happy making 15 points or whatever it was. That's all good. I'll take my Happy Meal money and be happy that I'm not giving back. But I got enough to give myself a Starbucks coffee tomorrow. and didn't lose any money with a new idea. So that I'm happy with that. So remember, here's where all the volume was in that grayed out area, and we are not trading underneath it. This is bearish. If my theory, if I've done those correctly, retraces should get sold into that area. The one thing that would change that would be a lot of volume coming into the upside. If they can get an X to the upside, a blue X, and they hold it, then that new low could be the low, right? So it's bearish now until proven otherwise. But we have seen situations where they do trade slightly behind it and then reject up. So I'll have to, I guess technically it wouldn't be bearish, it would be neutral. Bearish would mean we got a rejection out of this shaded area. So I guess I should be careful with my semantics. It's technically neutral until they break down from that gray area. But I'm assuming sellers are going to follow through. But that may be not a fair assumption. We'll see. And then it's bedtime because it's late. I got a long day ahead of me tomorrow. Do they defend it? So far, I'd say no. Looks like they don't. I'd be nervous about shorting down here. But it appears that they're going to try to fill that gap. And that makes sense. That's a sensible thing to do. Right? That's where everyone's focus is. But if they're going to save it, it's got to be right here on this bar, basically. But now I'm only interested in getting long if they can reclaim this area here. So I need them to get back up there, or to put in like a red bar down and then a blue X up, and then they try to retrace it, and then like blue dot or blue X or blue box up. Some kind of aggressive, or like a white star, something strong to the upside. If we get this pattern again, right, that would work. But assuming we don't do that, then I'm guessing we're going to go fill that gap. And that when they come back up here, they're going to reject it. And the next down bar with an algo on it's probably going to be a good sell. This is an interesting pattern, though, where we got what looked like bears in control, tested above it, but couldn't get the yellow line above it. See that? The yellow line never got above this high. I was thinking this aggressive buyer up here confirmed that we're going higher, but the fact that we couldn't get volume up there without rejecting with price might mean we have to go lower first, and then we might be able to go higher. So that's something to watch. I'll watch for this pattern too, where you have a red X and then a white star above it, but the volume line is below it. And if that gets rejected, that could be a trap setup. I might have to actually program that in as a new signal, because that actually makes sense. That would be a pretty good trade. Let me see if I can find that elsewhere real quick. So it'd be red X, white star above it, or blue X, yellow star below it. Let me see. Okay, I'll look for it real quick. I have no idea if that's something that shows up a lot. Yeah, it'd have to be up here. Let's see. Red X. No. Those are at the top. That's at the bottom. It doesn't look like it's very common, or at least it hasn't been in the last couple days. Let's go a little further. Here we go. Red X. That's... Oh, well, it didn't get above... It's got to be above this. Okay. Yeah, that makes sense. So it would be a star to the downside down here without the yellow line. That's going to be pretty rare, I bet. I don't think that's going to happen very often. Let's see. Maybe on the smaller time frame I'll see it more. So X, and then be a star down here. Okay, blue X star down here, no. Red X star up here, no. No. Red X would be star up here, no. Blue X would be a star down here. Nope. That's got to be the other direction. Red X star up here. Blue X. Nope. Nothing. No X's. No X's. They don't show up all that often. It's got to be a lot of volume in an area that's very confined. And it has to be an area that was uninteresting earlier. So here we go. Okay. Right, here we go. Oh wait, no, it's the wrong way. It would have to be a yellow star down here, or a white star up here, so no, nothing. Right there. That's it, isn't it? No, wrong side. That's tricky. Right there? Maybe it is. No, those have to be on top. So they get trapped. Although it's interesting that these seem to work as buys. So we got behind this and then saved it with a star. Huh. So we might be able to get behind them and save them with stars. That means I shouldn't be putting my stop behind them if that happens a lot. I don't know if it does. Okay. Yeah, it does not look like we get the opposite very often. But look how it tries to save it. And then this, so like in this situation, you beat it, the cell is here after you beat it, not the breakdown. That's the cell. Yeah. Okay, red would need a white star up there. Does not happen. Blue would need one down here. That doesn't happen. Yeah, see, you would need to immediately reject out of it and then trap someone. I don't think it's going to happen very often. Here, is this one? No. Right there. See, that would be one. And that's not the top. So I don't think that is a pattern that happens very often. That one did go higher, which is what I thought was happening for the one I took. Nothing. Nope. Red, no. Yeah, stars right after it don't necessarily mean they're going anywhere. See that? You get red X, star down, and then it rejects right away. So that is a thing, I think. But here's another one where the star saves it. You get underneath it, and then a star brings you back through it. That I do see happening a lot. Red X would need to trap one up here, and we do not. Yeah, it looks like this is pretty rare. That was just an unusual situation. Wow. So we did take that low, right? We took this low. We didn't take this one yet, did we? Almost. Okay. It looks like we're going to fill the gap. Cool. That's fine. So neither of those had continuation immediately after it. Okay. Well, I'll have to keep watching for that and see if there's a pattern there with the stars. That would be great if it was. See, here it is again. X, get behind it, save it with a star, retrace it. But it doesn't mean it's going to continue lower. It's just a short-term solution. Huh. Does that happen on the higher time frame? Let's double check. Because that's got different settings. I'm curious if this is something that's unique to one time frame or not. X, no star. It would be right after it gets underneath and they come back with a star. Going in the same direction as the X. So if it's immediately after in the same direction as the X, they tend to get beat. I wonder why that is. X, opposite direction in the star, and it rejects. Here, we don't get a save until here, which does have a star on it, but that's a long time from there. Here we go. Oh, there's no... Yeah. Red X, get above it, save it with a star, go lower. So, I wonder how often that works. That does seem to be a thing. Here it is again. Blue X, get underneath it, save it with a star, and we retrace the X. It ends up rejecting them. But there might be a trade there. It obviously doesn't happen every time. Yeah, it's got to be behind it. And this is a really high time frame, so if it was not a thing, it would not be here. This one is saved with a blue box. That might be a thing too. So get behind it and then reclaim it with the same color. Get behind it. Save it with the same color. Huh. Okay. Well. Cool. I will look for that too. Let's see. Where did we go? So here it would be get behind it. Save it with a star or a blue box. So white star or blue box could give us a bounce. Man, it's going to be like 5 minutes before London, though. That sucks. The timing really is unfortunate. We're probably going to come back to point of control. But I'd love to see if we get a white star or a blue box here, if it just runs. I'd be tempted to try it if we do. But it's just 5 minutes before London. It's like, ugh. That feels so gross when you're wrong. But look, it's right here, too. Red X, get behind it. Star in the same direction, retraces the whole thing. Even against the trend, that seems to work. Huh. Huh. Okay. Interesting. That might be the more reliable trade. Rather than waiting for the other one to get beat. Because this gets us a pivot. You would have to be patient, but if you got one, and then it did get beat, and then saved by a star, even if you just got back up, like if you wait for those times when it gets way deep, and you just target coming back into the range, that you could easily get 15, 20 points on that. And when it does happen, it seems to work. a lot. It doesn't always happen, but when it does, it seems to happen. It seems to work out. And then same thing with these blue squares. But obviously that's not every time, because look, this one does it here. Maybe it can't be pink. That would make sense. And then here, same thing. Red gets beat, comes back with the yellow, back into the same range, and goes lower. Okay, we'll see London, and then I'm shutting down. I just want to know if they're going to fill the gap or not. Which is basically back to the point of control. The blue is a gap fill, like 111.11 is a gap fill. But I'm thinking if they come back with a white star here, if they can close it white with a white star, or maybe even a blue box, they might actually lift it, and it might be buyable at 38.50. Fun. Dude, I'm hoping that's a real thing, because that'd be a great, great pattern. I don't know. Might be, might not be. Wow, Bitcoin broke out. Nice. That's at resistance too, though. So is ES, of course. ES looks a little healthier. NQ tested above resistance and rejected, which is usually a sign we need to do some rest a little bit. It really looked like it was good to go. But let's see what happens. I bet you anything they're going to fill that gap. And let's see if that afternoon low at 10.998 holds. I mean, that's a lot lower, though. Whoops, this is wrong. Oh, I see. Is this the old one again? I've got these all messed up. Okay, so it should be 10.998.25. 10.998. Whoops. $11.10. And then 11.054 is the other one. Oh, is that already there? That's already there. So this one's old. And this one's old. That's what happened. They're really that much farther away. Okay. And this one's old. Cool. Okay. Man, I'd be shocked if they don't fill this gap. But watch it come back up here and rip. That'd be really funny. There are definitely some buyers at that low. Man, did it not drop below there? I can't see because of the... Let me check. The low, 11.124. Right? And then the previous low, 11.123.50. It missed it by 50 cents. By 2 ticks. It missed it by 2 ticks. Okay, here's London. Let's see if they reject it. I think they will. But if they put in a star or a blue box here, it's probably a buy, unfortunately. I just hate buying opens, but I'm thinking that pattern might be real. I just don't know if it applies in this scenario. But it would definitely be tempting to buy it. It's got to be a star or a blue box, something aggressive to the upside. And it's really risky. Make that ultra clear. Right? But if they can trade 38.75 and it's got an algo on it that's strong, it's probably a buy. I just hate that it's right inside of this heavy volume zone. That's not really where you want to be a buyer, I would think. So I'm hoping they don't do it. And they technically did not take this low, but they took this low. But it was by 2 ticks. I mean, Usually it's better just to wait until they take this low out. Come on now. A little lower. And then it looks like it's going to be a yellow star to the downside. And after beating this, you'd think that's bearish. But it's got a print to do it. It's got to actually be a bearish bar. If it's a bullish bar, it might be a buy. See how they're going to trap this guy? Holy shit. This might go higher, you guys. That's funny. It might be worth a try. Let's give it a try. I don't think it's. I'm going to try it in the evaluation, the Apex evaluation. It might be totally not a good idea, right? But I'm realizing this actually. I could be wrong about this, but the fact that they got so close to taking it out, it might be just as good as if they took it out. Oh, but it's pink though. That might not be good enough, and it really should be. It should be on this time frame. That's not good. That's not what we want to see. They need to immediately lift this, otherwise I'm wrong. Really, 38.75 needs to trade to be sure. Otherwise, it's not going to work. But I'm getting in early off of the 15 tick because I can see that they're trying to lift it with a star. I just don't know if that's enough. But the location's right. It's just it missed it by 2 ticks. But if they take out that little low, I'll take a small loss on it because unless it comes right back within 2 ticks, it's got to like go down and then jump right back up. Yeah, right here they got to jump it. Otherwise, it's done. Now they've taken it out. I was just a little early if they do it now. So let's see if they can save that level, and then I can buy another one. So 32.50 would be the spot. Otherwise, no go, because then you trap this star and you'd retrace back into the zone. I don't know if it's going to work, which is why I'm not going to do it with real money. But I'm just going to practice this technique. And it might be totally bullshit because if it doesn't print here, it doesn't count. It was just an early entry here, which is a little bit sketch, but thought there was a chance they might not take that low, but they did. So now they need to get to 32.75 basically. Well, they need to get to 32.50, so I would get in at 32.75 to add to my trade. And then the stop basically goes like a point or two below whatever the low is at that point. But it really needs to close here, otherwise it's not worth it. But recovering this with a star, if it's got to be a star or a blue box up, otherwise I can probably just exit at break even and be done with it. It's got to be some sort of an aggressive recovery back into one of these X bars. We've seen it work before. I just don't know if it works on it. See that star with the blue box? That should be good. It's just on a small time frame. I want to see that kind of thing here. A star, blue box. There we go. Yeah, okay. So I added. We're going to see. I don't know if it works on a pink bar. We're going to see if I can get a little something out of that. I'm just going to put my stop under this low, and if they take it, they take it. It's fine. It's only 2 contracts. But we're gonna see if we can get, I don't know how many points. I just want to get a retracement back up. We're gonna take since I added, I'm gonna take my first profit at like 8 points, and then I'll do like 10, 15, and like I'll hold the rest. And I don't know if this works. Confidence level is like 25%. No clue. It might be totally just an anomaly that just happened the last couple days. But I saw it, so I figured I'd try it. But I'm gonna take a third off if they give me 8 points. But that's like 41, so that's a bit of a stretch. So, and then if I can get that, like I'll take it again at like 45.50, and then I'll leave a quarter. But they may not even lift it. But I've seen that this blue X that is saved by a star, and like I said, I saw it here first, so I took a little bit here and then I added here. But I've seen that move work before. I just have no idea what other conditions need to exist for that to work. No clue. All I know is sometimes that happens. So giving it a try in the Apex evaluation, because it's not real money, and if it doesn't work, it's fine. And if it does work, then I can learn from it. And if it doesn't work, you just make note of it and say, okay, there's an example of when you don't want to do it. Now let's find an example where, like, see if there's something conditional that I could have said, like, oh, that's why I didn't want to take it that time because of this. Now sometimes there is nothing; it's just a stop, and it normally works, and it just didn't this time. But the number one thing is it's 8 minutes after the London Open. But like if it comes down and takes this stop out like by 4 points and then rips, I'm just gonna say, okay, well, I traded during the London Open, and that's the risk you take, right? But the pattern itself appears to work at least sometimes. So, and for me, the only way I can learn to actually trade it is to try it. I need to execute it. Otherwise, I'll just like study it and study it and study it forever, and like never actually get paid for doing it. That's the thing. Like you can study this stuff all day, but if you don't actually execute it, you don't have to. It doesn't. It can be it doesn't have to be real money, but you have to practice actually pushing the button. So this looks pretty bullish. The blue, blue, blue. That's good. So I think I'm gonna get my first scale if I had to guess. We'll see. I don't know if I'll get 50, but I think I'll probably get 40 and probably 45. But we'll see, and then we'll let the rest go. I don't know. Like we'll just have to see what happens. But I will take 8 and I will take 12, and then I'll be down to like half, and I'll from there maybe take some up here like 67 in case that might make sense. In case it just like bounce like if it gets above. Let me think about this. This is the high volume area, right? So this is probably where it's going to reject, if it's going to reject at all. So I want to get paid in here for sure. If it recovers this and beats this again, I'm guessing it's probably going higher. So actually, I don't know if it actually makes sense to take profit at 50 at all. At first I was thinking get back to 50. But now that I think about it, if it can get through this high volume area, which I'm not sure if it can, it probably goes to like 70. Let's be honest. That's probably what happens. Right? But I don't really want to hold the whole thing any higher than 45, because there's definitely a chance that it comes up here and rejects. I mean, it might not even fail my 41. I don't know yet. I'm still full risk on. But this pattern I've seen work, so I'm gonna let it try it. We'll see what happens. But this midpoint here is a pretty good target, and that's at like 42. So I decided to take. I normally go for 10, but since I doubled my size, I'm gonna practice being prudent, even though it's not real money. I'm gonna practice. I'm gonna treat it like it is. It's still an evaluation. It still counts, but I don't really care if I blow it up. That's the difference. Whereas if it was a performance account, I would care. Canceled. Oh, nice. Okay, I got filled on my first one. Let's see if I get my 12. So that's it's just a little portion of it. I'm gonna, yeah, I'm thinking if this one closes, I should probably take profit again. So like 45, let's say. 44.75. Let's do 44.75 because they could reject anywhere in here. I don't know how strong this is going to be, right? But we said before, once they beat them, it's very normal to come back up here and reject. So, but this star getting trapped, if it is trapped, could create a squeeze. There's no more X's over here. Interestingly, there's not a ton of volume. No one's really fighting back. I'm waiting for a red X to show up here, and I haven't seen one. So either it's all heavy volume and there's just no anomalies, or there's just no one really trading to the short side down here. In which case, I might want to push my sells a little higher. I don't know how often these end up acting as resistance again. I haven't practiced this long enough to know how often this just squeezes, or if you usually go into like a balance mode. All I saw is blue X getting beat and coming back with a white star tends to lift. So let's at least secure like 300 bucks. I think that's the right thing to do. I'm going to go a little higher. Let's do like 46.50. We'll just go right here to this top. What is that? That's 48. Okay, we'll do 47. Let's see if we can get 47. I don't want to be anxious and exit too early, you know? But that would be 15 points. I'd be very happy with that. My average is 33.25. So that's 14 points, right? If I can get it. If you can get me 47, I'll take that. And then the rest, we'll just see, because they might just squeeze it. That'd be freaking funny. That actually worked. How fun. I wish I would have taken that with a real money account now, but that's okay. It's not. I literally found that pattern as I did the stream. So I'm just like, wait, this happens a lot. Oh, come on. Don't be done. I moved my exit just for you. No X over here. No real attempt to, even on the smallest time frame, to really all this selling is basically fake. There's nobody really putting in any aggression here. It should go higher. I'm not nervous at all really that it's done, but you never know. It should get me at 47. Should. And I have no idea where the rest of them should go, honestly. Up here somewhere. 67, I guess, makes sense. I'll do like 67, and then I'll put one at like, it might be finished, right? But if it wants to squeeze, we could do like 67, maybe like 82, in case it just tests over the Asia high and rejects. And then like the other one maybe above 11,200. 11,209. Let's 11,207. We'll just stick with the sevens. Why not? That would be pretty cool. I can't stay up too late to see if that happens, but if they could just fill my next one here, I can just leave the rest with the stop bracket and be totally fine with that. So I'd like to at least get that other portion off, though. I'd feel much more comfortable not having 2/3 of the trade still on. I at least want to get half of it off. That would be much better. So if they can get to 47 here, that'd be nice. Then I can be half out and just ride the rest. Yeah, this looks good. This looks really good. Look at these 3 arrows in a row. So as long as we keep holding this, we are golden. 4 more points. Come on. Man. So close. Almost took this trade with real money too, but like I said, it's fine. There'll be plenty of opportunity. If this is a pattern that happens a lot, there'll be plenty of opportunities to take this trade. But that is cool. But I do have to get some rest, so if it wants to stop me, that's okay too. It just means more sleep for me. But I'd be very happy if it could get half off at 47. That'd be awesome. But don't be surprised to see some volume in here, right? Because this was an area that was very important to somebody back here. So it makes sense that someone would try to defend this. Okay, they shift volume lower. They have to attack this back up now. Next bar should be bullish if it's going higher. They need to get right back into that volume, that high volume zone there. If anybody's actually interested in buying this and pushing it higher, they need to defend that now. Because otherwise that volume shift's going to result in a price shift too. So we want up on this bar. Like that. Yeah, a pink bar is great because that suggests the sellers who just sold are now giving up. Or the sellers that were on the order book are now like, never mind. A green bar here would be perfect. But a pink bar is also possible to get a squeeze. We just want a nice little squeeze up and just finish it off so I can go to bed. Nice. So we got a pink bar with a diamond and a star. That should be really good. It means there was some volume on here and we squeezed them out aggressively. Should be really good. I should be able to get filled at 47. It's gotta close pink though. I guess I shouldn't count chickens until they're hatched, but this one looks good. I want this one to close here and I'm good. Because if it closes bearish, it's going to have a yellow star. That'll be a problem. If it closes bullish, it'll be pink and maybe even green. That'd be great. I don't know if it'll have a star on the upside. It doesn't look like it, and that's okay. But this one got one. A white diamond here would be awesome. There, yeah, so volume shift up. Go! They got a squeeze here. They'll get a green bar if they can. That's a nice volume shift. Go, go, go. Bulldozer. Do it. Look at them trying to defend that area. This bar may not stay pink. Give up. Give up. It could just go... Like green bar, pink bar, white bar would be what I would expect. Oh yeah, see? So now they're trying to fight back. They're not pulling their orders anymore. We're going to need to have aggressive buyers push this. But if we do, it's potentially breakout. We just need to print a green bar here. We'll see. Orange bar, green bar like this at support is usually an opportunity for a lift. But they got to push it here. They should want to. Because everyone's looking at all this volume and thinking, we got to push through this. There we go. Go. Green. Turn green. Come on. Yeah. Now pink. Now white. Bulldoze right through it. Let's just squeeze it.
Order canceled.
Got it. 47. Okay. I'm good to go. I've got half off. I'm happy. Yep. Green bar. Pink bar with the triangle. This could rip. So if this is pink bar with a triangle and we get a pullback and then it bounces again, it could go parabolic. I mean, it could go... This pattern here, with star at the bottom, and then orange bar, green bar, usually you get higher. God, I'm so tired, you guys. I've got a patient tomorrow at 8:30. I should get some sleep. Oh, but this is I've got runners now, so it's like I got adrenaline now. But that's good. That's a really nice bounce right into this high volume area with aggression. And they trapped this guy bad. So they should defend this. I'm going to leave my stop under the low. There's really no reason to... The last thing you want to do now is get conservative and move your stop to break even. Because those pullbacks should get bought aggressively. It's possible that they swing under the low and then rip. Yeah, right? Like, that's always a possibility, and that would suck. But you're not going to catch the big trades unless you're willing to give yourself... You got to take the risk. But that may be the low. Which would be unusual for, like, London to open, hit the low, and immediately run. But I've seen it. Especially on a Sunday after a gap. A pink bar with a triangle here would be absolutely fantastic. But they got to close it there. Let's see what it looks like when it closes. Oh, they might do it. It could be a huge squeeze. I've got my next target, you guys, like another 20 points higher. God, I wish I would have taken this in the real money account. It's gonna pad that evaluation nicely. We got it. Oh, they are fucked. Sellers are in big trouble. Look, we got all the way through this high volume area with all the X's. All the way through it. It's over. This should now be support. Yeah. Next stop, 67. And I will happily take another little chunk and probably just go to bed and leave the rest as a runner. And then we'll just wake up tomorrow, and if it didn't stop me out, I'll just still be long. I think that's the way to do it, honestly. Otherwise, I'll just go like 100 points higher and just leave it there. But this could be the overnight low. I'll be honest. I'm not saying it has to be, but it could be. That would be really funny if they tried to fill the gap and failed. Yeah, this looks really heavy. The flows are just back. It's fun. Good to see. See the little head and shoulders on the volume? They had heavy volume into the low with aggressive volume. Not necessarily more, just aggressive. Really bearish. Like lots of people on the bid. And then once they broke over this, he was trapped. And then it's over. So that's support now. 11,130 is support. If they come back in here, they're going to buy it. And I would buy it if I wasn't so tired. Like, I would buy all those contracts right back again if they came back in there and bounced. If they bounce. I wouldn't have to be right at it, right? I would let them come back in there, bounce, and then I'd get right back into it. But that was an interesting pattern where we had blue, yellow, and then they got a low, and then they had a blue with the star again, and then yellow, and then blue again. So it's like over and over again they tried to fight them, and it's like, nope, 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 we're not letting go. Right at the low. Like, I've seen this before, but not at the low. That's really strong. I think I'm going to get this 67 filled, like, relatively quickly. And then really, I'm just going to leave the rest, because I don't know what's going to happen. Like, from the looks of it, if you look at the candle chart, like, from the looks of it, they wanted to fill this gap, right? And they barely did anything. And then zoop. But now we're back up to that resistance point again from the higher time frame, that pink, right? The pink outline. And so they could just reject it and go fill the gap. That's fine. But what I'm thinking is that they probably trapped some sellers expecting that gap to get filled. And those guys get squeezed out. So most likely we're at least headed to like 111.80, right? Which is why I'm thinking take some at like 111, like 68, 67, take some there, and then if they want to keep going, cool, because they could literally be going to like 111 or like I don't know, like maybe 100 points higher. If they can push through this high, the next pullback should be a higher low. And then who knows how high they go. But I could see them down, up, and then lower high and reject. I could see that, but the just price action and like the flow, the yeah, like the order flow suggests that these were really aggressive buyers down here. See all the stars at the lows, right? And they tried to sell it down there. They had a star on the higher time frame. What does the 80 tick look like? Yeah, see the stars down here? If these guys get trapped, they're gonna squeeze. It's honest. I think it's going to like 11,240. If I had to guess, I think it's going up here. Crazy, but I think it might be. So it's normal for these pink bars to get retraced. We just want to see them immediately reject lower. This would be very, very normal for it to print a bearish bar here. And if they don't, it's basically squeezing, and my confidence that it goes to the high immediately is much higher. But what would be very natural is to get a bearish bar here, a healthy pullback, and then a bounce around to 111.30. That would be very normal. Which is why I took profit that on the way up. But it'd be cool if they just want to squeeze it too. That'd be fine. So they get pink bar, orange bar with a purple triangle. Remember, that's usually, if it's bearish, they get continuation from that, right? So if we see this get ripped, we know it's bullish because that's a pretty bearish pattern. So let's see. If there's buyers, it's just going to go whoop, right through them. Yeah. Like that. Remember, super small time frame, so it's just, this is like almost like watching the order book. The DOM. It's like watching the DOM. But see how they had that strong, so like if it's bearish, we saw right here, that same pattern right here produces continuation lower, right? And then even when they try to rip back into it, that's resistance. And they aggressively defend it, right? So if they don't get continuation lower, and if they don't aggressively defend this, it's definitely not bearish. It's neutral or bullish. And from the looks of this low, it looks bullish. There we go. Another. Okay, there's our first X. Great. So we took a little bit of volume to recover this, right? That's what that's saying, is that there was a lot of volume in there. So again, if it's bullish, we're going to get immediate extension and probably a squeeze. And then what would be natural if it's balanced is to come back here and try to retrace that and repair some of that high volume and then see a bounce. That would be very natural. That now is our basic support. We shouldn't see them develop any volume down here. So if I wanted to, I could move my stop from here to like here, a 111.30. Wherever I thought it would be normal for them to pull back and bounce from. Not, it's not an exact science, but they should find buyers under this now, under this guy. They should find buyers naturally down here. Because it suggests they wouldn't be buying with volume unless there must be someone trapped down here. They sold down there and they had to aggressively exit. Right? This was their first opportunity. Remember, this was the first real sell signal. It was the first real sign of aggression to the sell side since this. And they responded by aggressively buying. That's bullish. Right? If I wasn't tired, I would honestly leave the rest of just seeing this. I would pull my order at 67 and move it like 30 points higher. Because that's not bearish. And that's not neutral. That's like, we're scared that the market's going to rip. So we're going to aggressively defend this area. Now, could we get a pullback here? Yeah, but it should get immediately bought. Should. Like that area should get defended. just like it did here, right? So the exact same thing. X, they traded under the X, they trapped somebody and aggressively defended the zone. That's just on a higher time frame. On this tiny little time frame, it's going to look like that. Putting in a head and shoulders with this. So that is where we want it to trade, is 111.30. If we wanted to get long, that's where you get long, is when they bounce off 111.30. I don't even know if they'll get that low. Like, if they can't retrace this X right away, it's going much higher. That's what I'm trying to say. Even when it is bullish, look how they retrace it. Almost fully. But when it's going much higher, they try to retrace it and rip, right? Squeezes way up. So we're basically about to find out whether or not they're ready to rip this right now, or if this is just the start of like a bullish move. It's the difference between a squeeze or just a trend. If it's a squeeze, this low doesn't get touched. And we just go rocket ship. Oh boy, I'm tired. And I gotta get up early. Come on, squeeze already. If they do get stuck here, I'm just gonna have to leave the trade out, and that's just the way it goes, because I'm getting really sleepy. It seems wrong to just exit, even though it I guess that's okay. I think it makes more sense just to leave it on. But you can see we're chopping back and forth in this high volume area. So if they get stuck here, I don't know. It would suck to get stuck here because that would suggest that these guys don't have any energy left. Okay, so we did trade behind it. Let's see if we get an aggressive response, because we should. And if we don't, I guess I can probably get out of it and just be happy with a small win. We should get an immediate response here. Relatively immediate. Because now we're underneath this, so we should get a star up if it's bullish. Doesn't have to be the very next bar, but shouldn't be much lower than this one. Like I said, 111.30 is like our ideal buy zone. It's also my average, but it's where I would still want to get long there if we bounce. But we'll see. It is London Open. They might just be playing games. But like right here, if they rip with a star, it's probably a buy again. And I'd be tempted to add back what I already exited out of. That'd be the right move most likely. And we know that it's a star at 11/140/150. Or if it gives us a bearish bar, we would know earlier. But now that we've traded under the X, we really do want a star to save it. These blue boxes would probably work too. That'd be fine. I don't think we'll get that though. Star we could do. I wonder if the star can come on this time frame. That I don't know. I haven't even thought about that. It might be one of those things where it's multi time frame. You can like refer to other time frames. It's possible, but I don't know that for sure. What we don't want to see is this be resistance. If that X is resistance, it might be done for now. Go, go, go. Maybe it does not look like they're going to get the star though, does it? I mean, they're not warning us that there's a star. Sometimes it still shows up when it closes, but usually you get early warning about the star. I don't see a white star up there. I'm not sure how often that has to be. I don't know what the percentage is because it's a new signal. I don't know if that's like something that has to happen to save these or not. But yeah, I don't know. I'd really prefer a white star to show up here. I think they need to shift volume a little lower. They might need one more bear bar. But to be fair, they did get orange bar, the pink bar, orange bar combo. They got that became resistance, right? On this tiny time frame, that did work. So it may not be quite as bullish as I thought, because that's something that works when it's bearish. But it's just such a tiny little time frame that it's not all that meaningful. But it may suggest that we need to go a little lower first. So maybe it does make sense just to scratch the rest of this and go to bed. I mean, I guess one way or another I can find out tomorrow what it does, but I hate the idea of having a well executed and well planned trade and not having it pay me. But I'm tired enough that I actually don't know if what I'm saying even makes sense. It's quite possible I'm totally wrong, and I might not know. I think it makes sense, but I'm not certain that I'm not missing something. But I think one way or another we're going to have to retake that 37. Otherwise it's going to get stuck here. It's got to come back in this zone and find buyers there, not sellers. Because as long as there's sellers in this high volume zone, it's just going to get stuck here. And I can't tolerate sitting here for much longer without falling asleep. And I've got a 12-hour day looking at me tomorrow within 8 hours. So the right move is probably just to take profits and leave. But like I said, the setup is good. I just don't know if it works. Sometimes they do, sometimes they don't. But we really do want this range here to get retaken. So if this doesn't close green, it may not be ready. It's probably as simple as that. It just needs to do it here. And that's easy enough. I still go away with a win. Man, that's too bad. Yeah. If they don't close this bullish, I guess I'll get out of it. I'm not saying it's not going to work. All right, I'm out. Ugh. I'm just too tired to really wait for it to turn around again, and I can't really be confident that they should have turned it there. Is what I'm thinking. I'm curious to see if they just reject it and get a star right here. Then it's probably a long again, because that was probably a little bit premature, but. Let's just see. Do they immediately reject it here? Would not be surprised. It's just what surprises me is it looked so bullish, and then they just kind of gave up on it, and they did so right at that high volume area. And I have a feeling that's probably significant. So that might be something I have to watch for too. Is not because normally I was thinking, if you give them up, as long as you don't reject under it, that it's safe. But I don't know about the top of it. Or are they gonna retake it right here? No star there. Let's see if we get one on the left. If this is a star, it's probably a buy. Man, that's irritating. Like I said, I'm just too tired to sit and wait for it, but it does make sense that it rips here. I couldn't handle the risk at the moment. But look, the close is right at the edge of that high volume area. Don't love it. It's rejecting right where this guy got trapped. Maybe they have turned it. If they can't take 38.50, I guess it's not bullish. It sure did look bullish 10 minutes ago. Oh, fuck, that was 40 minutes ago. Okay, I gotta go to bed. It's too late. Ugh, that's too bad. Come on, finish this bar. I'd love to know if this worked. I guess I'll have to maybe wait till tomorrow. Yeah, that's a very interesting pattern up here. Enough to spook me out of it, but I don't know whether or not that was the right move. I just don't like the location, that everything lines up with all of these X's where all the volume is. That's exactly where they rejected. And now, right where this guy got trapped, that's where they're trying to sell. It just doesn't look kosher. Because they could come up there, close the bar, and then immediately reject it, and it would look really bearish all of a sudden. But if they suddenly put a star on here, it's probably going to rip right through that high. Which would suck, because I already exited with a... I mean, a profit's a profit, I guess. I mean, they're certainly not making it easy. Just close it already. There we go. Okay, so they get the blue box. That should be good. That should be enough to push it. It's not perfect. But that probably does it. They did not take out the low. So if I would have left my stop alone like I'm supposed to, it would have been fine. I didn't know how long this is going to take. I thought this might be...
Canceled.
Wait. Why am I still in the trade? What the fuck? What happened? Wait, I'm still in the trade? Didn't I hit cancel? Hold on a second. Oh, you bastards. What did I do? I'm not sure what happened. Okay, well, I guess I'm still long. So, did I sell some of them and not all of them? That's weird. That's very strange. I'm not sure what happened there. I might have hit the wrong button. Maybe I just hit sell market instead of cancel, and I might have just sold a few. Well, worked out to my benefit. I'm definitely long, right? Yeah, okay. I was gonna say I didn't reverse on accident. That would suck. I'm glad I saw that, otherwise I would have let it go. See, I'm just curious if they're going to reject this high volume area. They're trying. Yeah, see, I don't like how they got in there and then rejected it. That doesn't look happy. Yeah. And now volume shift down. Back to 111.30. They're trying to save it. I don't know if they will. They're trying. Look at that. Because I mean, if this does work, then that pattern is pretty strong. I don't know how often it does work, but I don't know what button I pushed. How did that? Okay, so I've got all the everything's in the right place. Maybe I thought I heard it execute. That's weird. It looks like it sold half of it and kept the rest. I'm not sure. I might have to go in there and hit cancel all on my Apex account to make sure that they're not. I don't want it to like accidentally get short or something. But I'm like I said, I'm literally like seeing stars. I'm so tired because I've been up so late. So I don't know what I did. But one reason, or well, for one way or another, it looks like they're stalling at least. I don't know whether or not they're going to continue. I might just I don't know. I just have to decide if I just want to leave it. Probably is the right move. Or I could just get out now, I guess. But I think at this point, that opportunity was when I should have exited earlier. At this point, I might as well just leave it on. And let it do its thing. But that looks like a rejection to me. Right? Pink bar, orange bar, once again. They need to immediately beat this. Otherwise, I guess it's probably over. So I suppose I'll just get out of it if they put in another bearish bar and call it a night. Make sure it actually cancels my trade. I don't know how that stayed on. Rhythmic is funny though. Sometimes it doesn't work how I expect it to. The yeah, like I don't know. We'll see. Not looking good. Yeah, they really do need to save it right here. And it does not look like they have very much energy to do it. I thought they did, but it looks like that's a no. Shoot. Okay. Just take it already. Now it's just stuck. Alright, good. Take it. Take it. Oh my god. Come on. They just won't let me go. See how hard they're working just to get that little bit? Like, yeah, this is going to have to happen fast. Otherwise, this is going to reject. Squeeze. There's a 111.30 again. That does seem to be like an important spot. But buyers take it and then they don't hold it, and that's a problem. Go. One way or another. If it does close bullish, it could be okay. If it doesn't, I'm just done because I'm spent. But if it does close bullish, I'll leave my stop at the low and we'll just see what happens. If they close this bearish, if they close this bar bearish, I will just be done. With basically a scratch because I got that first profit off, but not the second. They're trying. They need some follow through. All the heavy flow was to the upside earlier, so if they can just get a bar closed bullish, it should be okay. But they need a pullback to hold. That's basically what the buyers need. So it doesn't have to be this bar, but for me it does, because I'm just not going to make it any longer. But intuitively, my thinking is it looks bullish, but I don't know if they're ready yet, and they may have to go down and sweep that low, and then lift it. But when they did that, when they went down to the low and swept it, the flow was all bullish. So I'm gonna assume that that's still there, and they're just kind of playing with people, getting as many of the stops as they can, and then once they run out of sellers, they'll rip it up. There we go. Stop me out. I just want to be out of the trade, please. Oh my god. Come on. The bar that lasted forever. This is the problem with trading outside of regular trading hours, is it can be extremely slow. But yeah, if they can close this bullish, I'll just leave it alone and leave my stop at the low, leave my targets where they are, and if whatever one hits, I'll just be fine with it. Because the setup was valid for this new idea. I just don't know what the conditions are where, like, I don't know how to manage it appropriately yet. Wow, they might actually save it. That would be funny. Oh, just as they get me some hope, now they're going to take it? Yeah, they certainly seem to be rejecting off that high volume area. They're trying over and over again and not getting any progress. Eventually, a real seller is going to come in there and just be like, fuck this, I'm taking the low. I assume. I hate the idea of giving up on it right when it's starting to work, but it's just not going anywhere. All right. They close it and immediately rip before I can even hit the button. Yeah, they have to immediately trap things, guys. It's just not. The idea that the low is gonna hold is getting less and less likely the longer it takes them to do this. There's a blue X here. That's interesting. So that usually gets retraced. Back up at break even again. Wow. Back to the high volume area. They got to keep going, otherwise it's probably done. You'd think this one should close quickly bullish, and then they would squeeze it now that they trapped that triangle down. If they're going to do it, this is how to do it. There we go. That'd be funny if this actually works. I literally almost clicked the button and then went to look, and I'm like, oh, it didn't get stopped by like a couple ticks because I had it like a point below. It like went right to the low of that bar and then just reverse with like a flat bottom, no wick. Like, okay, I guess that's fine. Wow. Oh, right back into that high volume area, and they just reject it. I don't think it's ready. What do I know, though? Go. Yeah, they got to push through this. Here's the high volume area again. They can't get stuck here. If they reject out of this, it's bearish. That is like exactly what I've seen happen is they reject out of the high volume area after trading below it, and then they go lower. So they got to break through this. Pink bars should help, but they got to close them bullish. But pink bar triangle up, that could be good. But it is very interesting that these high volume areas are acting as magnets and then reversal points. Just like they do on the daily chart. Come on. Finish him. Just squeeze. Don't reject. Go, 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 go. Sellers need to give up here. And I can just rip. Come on. Melt face. Go. Ugh. It's trying so hard. If the sellers put up a fight, it's not going to be pink anymore. Pink would be nice. A little more. We got it. Pink bar with triangle up. This might actually work. Wow. Look at that. That's funny. Squeeze. Wow. Give me another up bar. It's got to speed up here. It's got to break through that. There we go. That's fine. You can turn white. You gotta close it bullish. Yes, speed up. A little speed here would be good. Break through that high. There we go. One more. Pink. Up bar, up bar. Oh, they are trying hard. It's probably not going to be pink. Sellers are trying to defend that high. It's once again, now it's right above that high volume area. And if it goes higher, it should just squeeze. Because now they've trapped them. That was an interesting low. It really didn't look like it was going to do it. Okay, they have to find buyers here at the top here. Yeah, I really was not sure what this meant when it got all the way up there and then tried to reject. Usually they come up to the bottom of that and then they reject when it's bearish. And I'd never really looked at it when it did this, where it actually gets above it, but it's pink and then it rejects, and it looks like that's potentially not bearish. So it's probably more neutral. And so it could just chop back and forth here for hours, honestly. But the chance is always there that they could just squeeze right through it now. Pretty sure that's a possibility. But they could just get stuck here. If we can get one more up bar, that would help. Because I believe this area will be relatively easy to take if they can just take this guy. They got to close this at 56, and we should get to 67, and then I'm going to bed. Go, go, go. Ugh, they're just going to get stuck here. Really? Longest trade ever. Come on. Go. Feels like any moment it could just be ready to rip, but it's not doing it, which makes me suspicious. There we go. Yeah, if it doesn't retrace that full pink bar with the triangle, we're in good shape. So bullish bar here, and we are golden. Should go at least to 67 then. I don't know how much higher. If it can't hold that pink bar with the triangle, it might just be neutral and it's going to chop around here for an hour, and then I'm just done. And I'll just leave the trade on because it looks like it's got a chance to work. But I need some rest. So let's see where this one closes, but I'm probably not going to close it out now. Let me just make sure this is correct. Do I have all this right? Looks like it. I don't know what happened there. Sell 2, sell 2, sell 3, 3, 4, 5, 6, 7. Sell 7. Everything's right. I don't know. I thought I hit the button earlier, but maybe I didn't. Go. This is your chance. Do it. That nice big wick there is perfect for a squeeze. Just perfect. But see how 111.30 was still a good place to buy down here with a stop like at low of day. That was my read initially. as anxious about it as I did not take the trade, but if anything, I was getting ready to exit it there. But that was definitely the right place to buy. The setup definitely seems to work. It just takes so long when you're trading this time period that it makes you second guess your ideas because it just takes forever. In regular trading hours, this trade would be over in like 3 minutes. It does appear to be doing what it's supposed to be doing. It's just like tortoise versus hare kind of thing here. Don't get stuck. Don't get stuck. Just do it. Squeeze them already. You know they're going to give up. And yeah, new high, and then I don't know from there. I would take profits at 70 or 67, maybe 80 or 77, and then I'll just leave one, you know? And then tomorrow, if we're higher, we're higher. If we're not, I'll get stopped on that trailer. No big deal. Because I was long 16 and now I'm long 7, so I'm already out of half of it. I must have just sold some of them down there, which is too bad. It was about a break even because the numbers don't quite add up. I was long 16, I think. 15 foot. Yeah, I don't think I think I must have like sold 8. No, it couldn't have been 8. I don't even know what happened. But we'll just let it play out. I think it has a decent chance of working, at least to 67. Strong chance of that. And then I don't know about 87, whether or not that's likely to happen or not, but I think it's possible. And I have no idea where the other one should go, honestly. No clue what it's going to do from there. It could just keep going. Like, they might have shorts trapped from Friday. In which case, that low is safe. And if not, they're going to sweep the low. And then I don't know what. But I think I can at least get to 67 most of the time. If it's going to fail, it's going to be right here at this low, high volume area. It really just needs to break through that top high right there and put a bar above it, which would be right here. It'd be this bar. So if this bar is bullish, 67 should be shortly thereafter. Which is why I'm waiting, but I should be sleeping. There we go. That's what we want to see. Right into resistance. Let's go. Rip it. Right through it. Why wait any longer? Go, go, go. Go, go, go. There we go. That's it. That's what you want. You know you want it. Oh, I'm so tired. Come on. Hit my target. Let me sleep. Okay, right back into the low volume node, but we're clearly above the high volume area now. We need that bullish close though. Otherwise this could take forever. We need a nice close above that high and then it's done. It should speed up. Should. I don't know if it will. But once we get a close over that high, we should see more flow to the upside. But order flow has been all upside so far, so I'm gonna assume that's gonna continue to be the case. Oh my goodness, it's so late. Oh, I can't believe I gotta get up in a few hours just to go to work for 12 more. Okay, I'm gonna give it like 15 more minutes, then I'm going to bed. I'm hoping that it hit my 67 target before that. I really did not think it would take this long. I had no intention of staying up this late. Go, go, go. Yeah, it's gotta push here. Come on. It's like a slow motion freight train. It's clearly bullish, but it just won't do it. There you go. Yeah, we need some speed. They need to give up. Sellers should just be giving up here. Rip, please. Let me sleep. Oh my god. Wait, one more retest. Oh yeah, there we go. Pink bar works just fine. I'm probably lowballing it at 67, I'll be honest. It probably goes higher than that, and that's why I'm holding runners. But I need sleep, you guys. So I'll even take 66 at this point. You give me 66, I'll be done. Oof. They're fighting. They're fighting for it. Come on. Go. Like, there's no reason to exit, but I'm just done with this trade. It's clearly through that difficult zone. Right into resistance. There is no reason they should sell this. But the speed, the lack of speed just makes it so difficult. There we go. Get it. Go get it. Come on. 4 more points. There we go. Come on now. Pink bar, and then just go right to 11,180 maybe. Just do that. That'd be fine. Rip, rip, rip. Come on, 4 points. I'm taking 66, you guys. I can't handle it anymore. I'm going to literally fall asleep standing here. I can't even sit down anymore. I'm so tired. Put in a 12-hour day and I have another one tomorrow at the clinic. So it's just like, dude, let's go. Okay. Oh, I swear, if you miss me by 4 points, something's gonna get broken. It really has no reason to sell here. No reason at all. It should easily hit 111.80. It should go over the high day. And then some. Oh my god. There we go. Yeah, pink clothes. Do it. Oh, Jesus. You bastards. Who's front running me? Oh. It potentially has a long way to go. It is an error to exit here. I'll make that very clear. Okay. No. You will not turn around here. I hate anxious fills. I'm not moving my frickin' target. I already moved it 1 point lower, so they can just fill me. You're kidding me. Oh, come on. What's 2 points? It wants that high. It should be a very conservative target at 66. Ugh. No. Come back. Big rip up, please. For the love of everything holy, let me go to bed. There we go. That should do it. That's good. Come on now. Don't be like this.
Order canceled.
Got it. Alright, guys. Right to the Voodoo range level. I'm happy. I'm leaving the rest of it. I know that was an early exit, and I'm totally cool with it. I got another one, 1182. If you want to follow me out, that's fine. And I'm leaving the other one for as long as I can. I don't know if either of those are going to fill, but I was very confident with the 67 getting filled. Wow, that was tough. I need sleep, but I hope this was interesting or at least entertaining. And I will see you all next time. And wish you all luck. Take it easy. And yeah, this should be a really fun week. I am definitely bullish for the first time in quite some time, so should be fun.